please. Oops, that's not me. So if you can have the folks come out, I think I mentioned this. We'll charge people sitting in the back. We'll charge them a premium. So you want to avoid this, right? Everything else is free. So with that, I want to bring up our first presenter, who's joining us from London. He is the CEO of a very exciting company called Wahid X. If those of you who follow sports, if you know who Khabib Nurmagomedov is, he's a UFC legend. I think after Muhammad Ali, I think Khabib's name comes up as one of the great athletes of all time, like Kareem Abdul-Jabbar or Zidane or Muhammad Salah. So he's a legend. He's one of the investors in this company called Wahid, which is a fintech company founded by Junaid Wahidna. And the sister concern of Wahid is Wahid X, which is essentially a company that is going to invest in other startups, right? And we're very fortunate to have the CEO of Wahid X join us. He has spent many years in Islamic banking and Islamic finance, working for big names like UBS and JP Morgan. He educated in England at Queen's Mary University. Like I said, many years in Islamic finance. He's a serial entrepreneur. He's built 2 companies that I know of. And over the last 2.5 years, he's been heading Wahid X. So really looking forward to he's going to deliver a keynote. And then we'll have some time a little bit for Q&A when he's done. So without further ado, I'd like to turn it over to Safdar Alam.
Bismillah ar-Rahman ar-Rahim. Thank you so much, Tanveer, for the very kind introduction and for the honor of starting off this the auspicious event that you've taken the time to arrange. And thank you everybody for attending. So I know that the main focus of the talk here for me will be around the opportunities that we're seeing today in Islamic finance and Islamic fintech. So my own background, as Brother Tanveer hinted at, was I moved from conventional finance into Islamic finance about 25 years ago. And my background is largely in banking and investment banking. I was working in conventional banks on the conventional banking side, so everything which was not just questionable, but quite haram from an Islamic perspective. But that was at a time in my 20s when I was at a different point in my journey. And then I made a conscious move into Islamic banking, which is quite new, especially in London and in Europe at the time. And so I've been very fortunate for the last 25 years or so to have been able to focus on Islamic finance exclusively at that time, since that time. So moving forward from a traditional investment banking and financing background from Islamic banking, in the last few years, I've been fortunate enough to have some exposure to fintech. And as Brother Tanveer mentioned, there were a couple of startups that I was involved in, and they went very well, alhamdulillah. And one of them was acquired by the business that I now work for, which is Wahid Invest. That was Islamic. It was a Islamic neobank operating out of the UK. It was acquired by Wahid Invest to support their own development and move soon to be move into the banking sphere. And so it was an acqui-hire me and the founders came across. And very shortly after that, I was invited to set up the private investment arm we have at Wahid, which we call Wahid X. And one of the main things we do is we invest into startups. Some other things that we are going to look at in the private investment space is launching a real estate investment product for assets in the UK. And we're also going to launch some alternative investment products. And this is, so the alternative investments will include things like working capital finance, not just for established companies, but also the startups that we're supporting and that we're investing into. So my move from traditional banking, then Islamic banking, and now fintech, Islamic fintech, has really highlighted to me a few things. And one of the key things is the enormous potential we have with fintech and Islamic fintech in particular. And one of the reasons we have enormous potential is because we have, in a way, a blank canvas that I guess technology and opportunity and the financial markets are now giving to us that we didn't have even 3 to 5 years ago. And as well as saying that there's great opportunity in Islamic fintech, I would also say a very strong note of caution in the direction in which we move, in which we can move, and which I've seen that Islamic fintech space is having some skew in its direction. And so I would say, in my experience in Islamic finance, I've noticed a few things on a personal level and a professional level. And one is, I still don't think Muslims as a whole, we grasp the importance of it. And so it starts with what does our religion say? And the thing that most people would understand and know about finance and Islam is riba and interest and debt. And I don't think we understand that well enough as Muslims, and not just in the finance space or the professional Islamic finance fintech space. Generally, as a community of Muslims, I don't think we understand enough the enormity of riba. And I think that has a direct consequence on the direction of Islamic finance and Islamic fintech. So what I mean by that is I still see a lot of startups in the Islamic fintech space in the US, in Europe, in the UK, and also across the GCC and Malaysia. I see actually a large number of them still focusing on the wrong things. And this goes back to what I was saying about not understanding what our religion is saying. So I still see a large number of fintechs focusing on lending and focusing on debt, which is riba, but in another form. And making debt and riba into something Islamic. An Islamic version of riba is something that I've seen done in the industry for the last 20 or 30 years. And we see the crossover of this into the Islamic fintech space. So while I say at one time Islamic fintech does give us an enormous potential and almost a blank canvas, but at the same time, there is a legacy in Islamic finance globally, which I feel the baggage of that is also being taken forward in Islamic fintech. So for example, when we look at entities that are applying to us for funding, and we encourage Islamic fintechs to apply to us for funding, startups. So when we invest in startups, we do have, and we make no bones about this, we have a specific preference for, as much as possible, ethical founders, founders that we understand, coming from a direction that we understand, and also Islamic fintechs who are focusing on Muslims, first of all, and also their products are compliant, Sharia compliant. So in that space, I still see a large number of fintechs who focus on debt and lending. And there's a Sharia compliant way to do it. And it's a very, technical and takes many steps. And it's a view, my view, and I don't think I'm the only person, is that I see that's not ethical at all. So I think lending should not be done because it is built around riba. If you find an Islamic way to do it, it's still lending. And I think it's in fact, it's a distraction of our resources. So this is an important point for me to mention. On a weekly or a monthly basis, we have applications from Islamic fintechs, Islamic founders, and their business model is lending. And our view, and my personal view, is we say no to them. We say we can't invest in this, even though it's an Islamic fintech, because we don't support lending. We think there's many other directions that Muslims and Islamic fintechs can go into that is not lending. So why do people focus on lending? Because it's often the easiest route to market, and two, it's the most productive. It makes money. The lending institutions are generally the ones that make the most money in good times and bad. And this is my understanding from a background of finance and conventional finance and banking. So the kind of things that I do really enjoy and I like, and we are seeing some of these in the market, is that where founders are creating fintechs to provide opportunities for Muslims where there's significant problems. So if we imagine in our daily lives, one of the biggest problems we face, as I see it, so one or two, one would be home finance, right? This is something that has been a big problem for Muslims for some time in the UK and in the US and in the West, that there's no meaningful Islamic solution for us to buy homes. So I know there have been some efforts have been made in the UK and the US, and they've been, I would say, with the best will in the world, they've been suboptimal because they're built around debt and lending. And there's very much, you see, opposing views from scholars, whether they are Sharia compliant or not. So I think this also confuses customers, right? We see Islamic home financing schemes, but a lot of them are actually barely Sharia compliant, and a lot of scholars say, well, they're not Sharia compliant. So in this space, I do like to see, and I wish to see more Islamic fintechs that are looking at this problem to find a way to result in home finance that does not revolve around debt or lending or taking mortgages and just changing the name. And this involves a real mind shift, not just from the founders who take on the courage to take that journey, because it's a very difficult journey, but also from consumers, Muslim consumers, how we use our capital. So Islamic fintech, actually the future of it is around controlling the source of capital, right? Once you have some level of control of the source of capital, you then have a direction in the allocation of that capital, right? So one of the things that Islamic fintechs need to do is to be able to aggregate capital in the first place. Once you And that's a very difficult thing to do. Once you can aggregate capital meaningfully, then you have some level of control over the distribution of that capital, the allocation of that capital. So in home finance, for example, we stand ready to support fintechs and startups that are looking at this massive problem Muslims have. And to be honest, there's not that many. We're not finding that many that are founders that have the courage to take this very difficult route. And then second, to have a startup institutionally that's ready for investment. So this is one of the other things that we see when we say we're very openly want to attract Islamic fintechs. And our portfolio, so we've been active for about a year and a half. We have about 10 or 12 companies in our portfolio. A good number of them are Islamic fintechs, and we're really supportive of the founders. And our investors are also very largely Muslim investors, and they really like to invest into Islamic fintechs. But I still don't see enough fintechs that are tackling the major problems that we have. So home finance is one of them. Home finance so the terms that can be used in the market is equity home finance, private home finance, that actually aggregates investment from Muslim investors and utilizes this to invest in a property to purchase for Muslims, so they don't have to take part in the mortgage. Now that's a reasonably tricky thing to arrange financially, and Muslim investors and also us as Wahed as investors. One message that we get clearly from our investors is that, look, we do like to support Muslims, we do like to support Muslim fintechs, but above all, Muslims want a strong financial incentive and a strong possible financial return. Like risk and reward tops everything, right? And so this is something that I see when we attract applications from Islamic fintechs. Unfortunately, a number of them are also just not up to par to be ready for investment. And so with those, where they're sincere Muslims, we like to work with them and help to guide them to take them into a position that in 12 months or 24 months, they could then be ready for investment. But a large number of them who are driven by well-intentioned Muslims just don't have the caliber or the proof of concept to be able to take it to market. So they need a lot of assistance on day one. And one thing I see in the Islamic fintech space, or a note of caution, is that, and this mirrors, so this continues a legacy from the wider Islamic finance space, is that we actually have our barriers quite low, meaning if somebody wants to make a noise in Islamic fintech, they can make a noise quite easily, and they don't actually need to have a meaningful product, or in fact, meaningful caliber to be able to deliver the product. That if you make enough noise, you can get headlines and people will talk about it. But often when we look at investments, so as I mentioned, investors want financial strength. You know, they typically won't compromise. Or even if something is Islamic and it's a fintech, they want the company to be as strong as any other non-Islamic fintech. And on that basis, we see a lot of applications that we can't support. So one thing I would like to see is to see more high caliber founders come into the Islamic fintech space. So at the moment, we see founders there's a difference in caliber that I see between Islamic fintechs and non-Islamic fintechs. And non-Islamic fintechs tend to have a much higher caliber of founder. There are exceptions, and when there's exceptions, we like to support them. So one thing I would like to see is more higher caliber domain experts coming into Islamic fintech. And also, you know, I guess the perfect package is as Muslim founders who are also very sincere in how they want to do business. So I do see a lot of potential in Islamic fintech. We're very supportive of it. This is my job to support Islamic fintechs. So, but one note of caution is that, you know, I would like to see higher caliber founders, and this comes down to education. So it is about encouraging talented Muslims to become founders, right? So me having been a founder, you know, and a bit older than the average fintech founder who are in their 20s and 30s, that when I was a founder for a few years, you know, it's incredibly hard. I found it very, very, very difficult. The amount of drive and consistent energy you need over months and years for your passion, it's really hard to maintain. So when I did achieve an exit and we were acquired by Wahed, and then now I start up a new business with Wahed, I was more than happy to do that, because I think one thing we do underestimate, or we don't understand enough, for those of us who are not founders, is the amount of absolute drive and dedication and devotion needed to be a successful founder. Like it is absolutely phenomenal, the amount of drive that you need. And I think one of the things that we need to do is help to educate potential founders, Muslim founders, to say that this is something that you can do. Really, you need passion amongst all, and then develop your domain expertise. Then develop a business model, you know, find a gap in the market. And there are many gaps in the Islamic fintech market, many gaps. and develop a viable product. And companies like us, we're here to support initiatives that are perhaps at the moment pre-investment, who are not ready for investment, but who want to get there, and we're happy to support them. So I think education is something also that's not as strong as it can be in our communities. It's education right from the basics, right? When it comes to finance, education about our religion and what it tells us about finance, education about riba. The reason I think riba is fundamental is I think if we actually understood the depth and the seriousness of the sin of riba, we would without doubt already have devoted much more of our resources to solving this problem. And one of the reasons that actually, as a group globally, Muslims have not devoted many resources to solving riba globally is because we don't appreciate the seriousness of it. Now, for us, it's just something in a book. It's just about debt and interest, and we kind of avoid the difficult conversation that riba is actually a problem in our everyday lives. So buying a home, that's the first step, right? So it's very difficult to avoid riba, and I think it's very natural to want to buy your home. But I haven't seen any meaningful step on a global basis for any institution to solve this problem for Muslims. What I have seen in the US as well is I have institutions with a label of Islamic who develop some home financing products that are highly, highly questionable. So I know a few years ago, one of the leading scholarly institutions in North America did a very detailed and a very high quality analysis of the home financing options available in the US. And, to be frank, none of them were judged as good, right? They were all, they were saying, look, as a matter of necessity, if there's nothing else in the market, the Muslims can consider these. And I think one of the reasons we haven't, as a community, we haven't dedicated the human capital and thought to developing good solutions is because we're not educated enough on the horrors of riba. For us, it's a loan and it's interest, and that's what it is. But it's not this much more than that. Today's financial system is built on riba, and it's a very damaging financial system. And if we want to understand why do we need to take a mortgage to buy a home, right? Why they're so expensive is because of riba. It's because debt creation through fiat currency. It's through the banking a credit creation to create mortgages out of lending out of nothing, out of thin air. That increases the money supply artificially. Now, when you have a larger money supply chasing ultimately a finite number of assets, which are homes, prices double. Prices double, triple, or they go times 5 and times 10. And that's why we need a mortgage, right? We need a mortgage because of riba in the first place. So I think this is a damaging loop that we don't understand. And I think that's where it would begin. In my view, I don't think we have enough education amongst average Muslims. Then amongst founders, potential founders, we need to educate Muslims that, so when I was looking for work, it was really, you go out and find a job, right? And you have good qualifications, you try and get a good job. But nowadays, there is a class of Muslims who are highly capable and very talented, who should be made aware of the potential in venture, in enterprise. And the gaps in the market are very huge. Even in real estate, for example, which is a global, well-known asset class, but I would say even the Islamic entrance into real estate is highly questionable. So this is something we're looking to launch at Wahed and Wahed X in the coming few months, is to enable Muslim investors, retail investors, for a low number, a few £100 to come into high quality real estate deals. And one of the difficulties of that is immediately the first thing you see is debt. Right, even in Islamic real estate deals, they have leverage, they have debt, but they have Islamic debt, but it's still leverage. You put in 20 or 30% equity, and the rest is loans, but it's Islamic loans. So even in real estate, we haven't solved the problem, right? If you're a Muslim, my personal view is that all debt is wrong. All debt falls if you benefit from it, and I'm yet to see any level of commercial debt where nobody benefits, right? If you benefit from the giving of debt, then it's riba, whatever you call it, if it's Islamic or not. So in that space, I haven't seen any real estate solutions, meaningful ones, that avoid leverage, that avoid debt, even in the Islamic space. So I think real estate as a sector, not just home finance, has huge gaps in it for Muslims. And so just to reiterate, Islamic fintech, I think there's fantastic opportunities going forward. I'm a massive supporter of Islamic fintech and Islamic founders, but I would say, one, we need more education amongst Muslims who are ultimately, so this is linked to the aggregation of capital and the distribution of capital. So ultimately, Muslims have the capital. So one interesting thing I heard speaking to one, it was at an event. One of the speakers he spoke about Mormons in North America. So he said in the Mormon community they're very tight, like not just personally, but also from an economic point of view. Like their money circulates amongst themselves. So he said if you have a Mormon dollar in the Mormon community, it will typically circulate amongst the Mormon community 12 or 13 times before it leaves the community. And that has a very powerful message, right? And it's something that we haven't achieved, and we're not close to achieving in the Islamic space. So one of the things, so if you look at Islamic investments, so you go to Muslim investors to aggregate capital, then the first thing we do is invest this capital into maybe listed securities or even real estate. And then that capital is leaving our community, right? We bring the capital in and then it leaves. So I think ultimately, one of the things we would like to do, and this is why I'm going on about education, is that we should be trying to build an infrastructure, an ecosystem where capital can circulate amongst Muslims for our own benefit, and also ultimately to please God, to please Allah. I mean, that's why we're here, and that's why I work every day. And so this begins with education, working together, trying to get an ecosystem where Muslim capital can be circulated amongst Muslims and allocated to gaps where Muslims have great needs. I mean, home finance I keep going on about is a major one, but also regular investment. If a Muslim wants to invest, so this is something we have here. When you look at real estate, and the interest rates are higher, of course, in the last few months, and there's an Islamic bank in the UK that's paying very high interest rates, and it's not called interest rates, it's called profit rates, but they're paying about 6% per annum on term deposits. So if you show an investor an investment opportunity that maybe earns 5 or 7% per annum with some level of commensurate risk, the customer will say, well, I can deposit my money with an Islamic bank and get 6% per annum, right? So this creates an inequality in people's perception. And this goes back to education as well. We should not look at non-Islamic opportunities as a magnet for our capital. We should just see it as it's impossible for us. And if we saw that as impossible, we would then push to deliver more solutions. And so I think education is key with everything. Education with Muslims, with families, with children, education for potential investors, and education for potential founders as well. How to identify gaps in the market, how to understand Islamic finance better. Okay, so I know I've talked for quite a while, but I'm happy to speak with you, Tanvir, if you have any questions, for example, that you'd like to ask me.
We talk about adding in terms of work instead, in terms of
We have a presentation by me later on today. Yeah, so that'll be covered there. Brother Sabdar, are you able to hear me?
Yeah, yes, I can hear you.
Now, do you envision is Islamic finance growing beyond the appeal for Islamic finance growing beyond the Muslim community, right? Like when you are looking at the longer term vision for Wahid or Wahid X, do you envisage a day when we'll, because of the ethical aspect of it, would just love to know your thoughts on that.
Yeah, so this is a very fundamental point. I think so we're at the very beginning of the journey of uplifting Muslims. So at the beginning of a journey, I think there is a very relevant message to be directed at Muslims. But I think the wider message is, and I think where we should work towards, is that really Islamic finance is even the label Islamic is misleading in my view. So for example, if you go to a supermarket in your daily shopping, most of what you're going to buy, it doesn't even cross the consideration of Islamic or not. Like you buy apples, you buy pasta, you buy rice, you buy yogurt, right? So most of what we do in our daily lives is I guess, especially in finance, most of it is agnostic, right? There's only certain parts of it that are Islamic which relate to debt. So if we present Islamic finance really as an ethical stance, which it absolutely is. So when you look at investment into companies, so we do look at riba, we look at the debt levels. But if you explain debt as something as an ethical position, I think large swathes of the community would agree with you. A lot of people understand the damage of debt. So you don't have to say, riba is an Islamic thing, But debt and interest it's globally understood that the damage that debt does. And then if you look at investments in a company, you could say, well, look, we don't want to invest in a company that does, military armaments, tobacco, pornography, gambling. Then actually a lot of ethical investors would agree with you. So to emphasize this point, there was something a year or two ago in the UK in the supermarkets. So in one of them, one of the very large brands in the UK, they make bread. So in one of the supermarkets, you had the bread aisle, all the bread, and this brand it's a major brand, right? It's not Islamic at all. They just make bread, right? So they decided on the cover of the bread to say this bread is halal, and Muslims were like, well, like it's bread, like we know it's halal, right? But there was a bit of an outcry from non-Muslims to say, what's going on? Why are our shops having sections for Muslims, and why is bread like being made available for Muslims? So there was a movement where non-Muslims would refuse to buy that bread because they would say, I don't want Muslim stuff. Why is it made for Muslims? Why are we doing this? And there was talk about boycotting shops and so on. So amongst the Muslims who were laughing about it, is to say, like, it's just bread, right? Just say, wait till they find out about water, wait till they find out about air, right? It's all halal. So this goes to, I think, the roots, in my view, of what you're asking, is that, in my view, Islamic finance and Islamic fintech is just global ethical values. And in initial stages, we do have to have a specific angle towards Muslims because we need to draw Muslims in. But once we get beyond that stage, we really should be presenting ourselves to the world as just an ethical alternative, right? It shouldn't be something for Muslims or something weird that only Muslims do, because a lot of what we do that's driven by our religion and our financial rules, which are actually, our financial rules are incredible. They're incredibly simple and incredibly strong and incredibly ethical. And I think if you just present the rules to the global population, they would just say, well, it makes sense. And it really does make sense. So, and this is an important message to get across, because when we look at Islamic fintechs, investment in Islamic fintechs, when an Islamic fintech goes to a regular VC and they say, look, we're Islamic, right? We're Muslim founders who target the Muslim market, most VCs will switch off. They will say, we don't understand this. It's not our niche, and we don't know how to assess you. We don't know how to assess the market and assess your potentiality. So it's not for us. Now, they typically wouldn't have anything against it, but they just say we don't understand it. And so there are not many VCs, like we're one of the only few in the world, at Waheed and Waheed Invest, where we actually encourage Islamic fintechs. But one of the consistent messages we see is that Islamic fintechs have a difficulty to present themselves in an open way to the non-Islamic finance community. And I think that's something, again, we haven't yet managed to overcome.
One more question, and we'll be done. And if we can have Brother Shakib get ready for the next presentation. If someone is new to Islamic fintech, do you have a recommendation as to what should be the starting point? Is it a book, or what's that starting point? A book, an article, or any recommendations from your side?
Well, actually, it's very hard for me to think of anything, and I think maybe this is part of the problem, right? No, it's very difficult for me to think of anything that's meaningful and consistent and presents the market opportunity and the discussion of Islamic fintech in a meaningful way. I really cannot think of anything that I would recommend, and I think maybe that's part of the issue that we have when I talk about education. We haven't put enough emphasis into creating educational material for Muslim investors and Muslim founders. So I'm sorry, but I can't think of anything.
All right, Jazakallah khair, Brother Safdar, for that talk. Just to introduce myself real quick, my name is Rian Hussein. I'm a senior at Bellman College Preparatory, and I'm hosting this alongside Brother Tanvir. Jazakallah khair for everyone for coming here. So inshallah, our next speaker will be Brother Shakib Kundiwala, who's the founder of Haya Financial Strategies. Shakib has an impressive career spanning over 2 decades. He's been dedicated to uplifting Muslim communities across America, guiding them to implement a solid financial strategy for themselves and their families. His approach involves a 3-part system akin to constructing a sturdy house. Examples of his work include working with his local mosque leadership and community members on the benefits of donating stocks and securities. Community members can transfer stock at their cost basis and receive market value buy-off, while the mosque receives a market value post-tax and enjoys tax-free growth. So, without further ado, please help me welcome Brother Shakib Kundiwala.
Assalamu alaikum. Money, right? Money topic. Very interesting. That's why we're all here, right? To figure out what we're going to do with our money. How are we going to halalify it? Is it in the right places? Right? There's so much to know, just like the brother said. It's just now coming into mainstream where we have options. Our generation is really exposed to a lot of different things. Quick disclosures, if you want to take a photo of this, the best way to contact me, and I promise you, we will want to talk to me in one format or another. I bring a very unique kind of perspective. I've been in the country for almost like 25 years now, right? How long, anybody born in the country, or are we all immigrants, right? First, second generations, basically? Okay, cool. Okay, thank you. I got you. So full disclosure, right? I'm licensed in a couple of different areas. One in the insurance space with the state of California, some other states as well. Registered with FINRA to be able to talk to you about how investments work, right? What type of accounts that we have, and how a 401k works, how a Roth works, why at age 60, and all these different components. So kind of going through and helping my parents with their wills and estate, managing my own finances, getting ready for 3 kids' college educations and their expenses and all this kind of stuff. It made me realize we got to really look at this in a holistic way. We have laws to follow here in the U.S., and how can we incorporate our Islamic values into these laws? So I'm going to talk to you today about Beitul Mal, right? A house of wealth. I want each and every one of you to envision yourself, your own house of wealth, whether it's you on an individual basis, if it's you with a couple, right? Husband, wife, and with a family. And we're going to break it out into 3 simple steps. We're going to talk about the roof of your house, which is the estate planning, right? Do you have an Islamic will or a trust in place? And how does that get developed? Is it the help of a lawyer? Is it help of a Muslim lawyer? Is it some of these online agencies? Is it just, how are we going to fit this gap? Because first question to ask yourself, if something happens to you today, tomorrow on the way home, what is the family's course of action? What do they do? Try to answer that for yourselves. Once we kind of look at, how we're going to implement it, who we're going to talk to, based on your school of thought, it might be a different way of distributing your wealth to kids, to boys, girls, spouses, right? I mean, there's all these different rules in place. California has community property laws. How do we address that? How do we make sure that the language is there so that the distribution can occur appropriately the way we want it, right? So does that make sense? Everybody kind of like on the same thought process there? It's important, right? Would you all say that it's important to have a will, estate plan in place, if you're, especially when you're living in America? The second thing I want to talk about is the structure of the house. So we got the roof, we got the structure. Are we going to build a wooden house? Are we going to build a cement house? Multi-floors? Is it going to have an elevator in it, right? All of this stuff is high value. So as you are employed, whether you're in tech or income earners, if you're a doctor, you have state pensions, how does all of these accounts and all of this accumulation happen? If you're 41, I'm 41 today, I got 19 more years ahead of me before my retirement starts. Well, great, that's retirement money that I'm kind of locking away right now by deferring either on taxes out of my payroll or putting it into a Roth account and it's growing tax-free, right? All of these decisions need to be made. Is it going to be paper money, right? If it's just all in the markets, if it's stocks, if it's real estate, everything is dependent on like market strategies, right? Like when the time is, when to enter, is it the right time to buy? All of these questions come into place. The third thing I want to talk about is once you kind of have that structure of the house down, you got to have a really good foundation in it, right? So what's the foundation? It's you guys. It's us. It's our ability to earn income and to put money to work, right? It's us. We need to protect ourselves so that if we get sick, we got health insurance, right? If we get disabled or we get injured, right, our employer picks up a little bit of the tab with disability. If we're living a long life, right? Like inshallah, we need long-term care. Is it my kids that's going to take care of me, right? Are they my long-term care plan? Where I'm in my 70s and 80s and they're in their 50s and 60s, are they going to be helping me go up the stairs? Like they barely can do that now themselves, right? So you have to kind of think about what is it that you're going to do for yourself in those moments and milestones in life. So all this wealth that you're accumulating, is it for retirement lifestyle, 60s, 70s? What about when you're in the 80s, 90s? Will you have enough so that it lasts that long? You know, worst case scenario, you got a mortgage, you got kids that are in college or about to go to college. Something happens to you, you know, is your employer life insurance going to pick up the tab? Probably not. So you have to kind of consider health, disability, long-term care, life, however as it fits you and your foundation, and you got to work with your employers and outside agencies to make sure that you're using it appropriately based on your value system as it relates to your house of wealth, right? Because in the Bay Area, if you got a couple of properties, 2-3 properties, then you're over the 11 million mark, and now the estate tax rules kind of kick in, and how do you address that, right? So I want you to vision the house. So this is the process that every time a client or someone reaches out to us in our office in in Roseville, we're a national office, so we kind of cater to all the Muslims around the country. But this is the question that I ask. The very first thing is, what are you doing today? And what's the purpose of you doing it? Is it for retirement? Is it for college? Is it for wedding? Is it for this, that, whatever it might be? It just might be for a lifestyle. And what are you doing to protect that? And what are you doing to kind of make sure it gets distributed in the appropriate manner? Who wants to have their family go through probate court and deal with the lawyers and court for distribution of your assets? It's a public matter. I'll get to know, I sit in probate court and family court. It's all in the same building in Sacramento, right? It's all the same family law. So you could either go and say, I'll address it when the time comes, or you put a will and trust in place so that it stays private, it stays out of the courts, and you get to distribute your assets the way you want it in private, right? So this is the process that we take you to. So there's nothing fancy about it. You guys all know this stuff already through your employers. Most of you have already doing all of these things, right? That you already have the will taken care of through some employer provided insurance company, so that it's addressed. Great, fantastic. Are you addressing your structure on a pre-tax, post-tax basis? Are you doing financial strategies to be like, hey, I don't want to pay tax now. I'm going to defer it down all the way as long as I can in all of my accounts. And then when I pass away, it'll get kicked down through the estate tax-free. So that's one strategy to kind of defer or not pay tax, right? Everybody's like, how do I not pay this? Or how do I not do this? Fantastic. That's just ways to do it. It just depends on each person in here is going to have a different approach on it. But this set fits everybody, right? You can relate to how your house is being built. I see some puzzled faces going, not doing so well in that area, or this is missing, or that is missing. I need to address this, right? That's what we do. So as fiduciary kind of law kicks in, we have to do right by you. One of the ways that I pride myself as a Muslim to be able to do that is to tell you exactly how to do something, why to do it, where to do it. Go do it yourself, right? You have the blueprint, you have the financial know-how, the resources, and the education to get this done. The hardest part, 90% of the time I see my clients, is they don't take the action. They don't do the task. They need to sit down, and in October, just a couple of weeks away, you have to do your taxes. Everybody in here done their taxes, right? Yeah, I did it in March something, right? I was like, knock it out, done. I don't need to kick it down the road to October, but we're going to get in front of our computers. We're going to sit with the CPA or somebody and address that, because we don't want to get penalized for it. So we're going to address that and take care of it. I want you to do the same with the estate planning, right? Who's going to penalize you? Your family will. They're going to be the ones to say, why dad didn't take care of this? Like, this is a no-brainer, right? Address it, take care of it today, reach out to us. We have in-house lawyers, we have in-house CPAs that can help you we do 80% of the work for you guys, and then you pay 20% of the bill. So for example, go to a lawyer, get a quote and see how much they'll charge for some of this kind of structure, and come talk to us, and we'll take a look at how it works out. So I want you to really understand that your financial house is something that some effort is going to be involved. You're going to have to take some time. You're going to have to address some of these issues, and really, one of the things I do in Roseville at Tarbiyah Institute with Imam Aziz is they allow me to teach a class there every month. So throughout the course of a year, we looked at so many different layers of this and made sure that the folks were educated and they knew what to do so that they could take action. One sister was like, I have my 401k, but they put it into a birthday fund, and I don't know how to change that, and I want to make sure that it goes into Wahid and it goes into Amana. I'm like, great, call them up. It's a Fidelity. Ask them to do X, Y, and Z, open up a broker account, funnel that money, and go and pick out and choose what you want to invest in. There's ways to do it. You just got to be able to know how that route is. So keep that focus, keep that determination going. That, listen, I know I want a good retirement. I know I want to have good long-term care. And before 60, I got 19 years left. I want to be able to spend on vacations. I want to be able to do these extra things. I want to have them go to private school, whatever it might be. It's going to take some effort on you to take your income and then say, okay, I'm going to pay my family members. I'm going to pay myself. I'm going to take care of my Beit al-Mal first. And then whatever money is left over is what I'm going to spend on my car, my food, your discretionary funds, right? Put some money aside for yourself. At the end of the year, when you're going to do your taxes and you have a $5,000 tax bill that you're going to have to give to the government, I want you guys to ask yourself this. Do I pay the government now in this year? Or can I pay myself into retirement by deferring something and loading up some other accounts that will help mitigate that tax? If I'm still short, can I donate to my mosque? Can I donate to my mosque with cash, credit, however that might be? Or do I have some stocks that have appreciated in value? My cost basis was like $100, but it's appreciated to be like 1,000. I'm gonna donate the $1,000 stock because I get $1,000 write-off on my $100 cost basis. Why would I want to do $1,000 in cash to the donation where I can get a better result, tax strategy, something a little bit more appropriate, using different ways, right? The end result is still the same. So when we talk about the structure and how to invest, we talk about Wahid, we talk about Amana, we talk about Azad, we talk about all these agencies like Amin Housing, right? Guidance, because these are all Islamic options that you guys have, instead of just a traditional route of, okay, well, the employer says this, everybody does with Fidelity, I'll do with Fidelity. Why? We have all these companies in here today. There's no reason why we can't keep that money or wealth within the community so that it benefits each other versus just trying to say, I'll pay the tax, I'll pay this Charles Schwab, or I'll pay Wells Fargo for the broker, or whatever. If you download this app called Zoya.finance, they've taken a lot of this guesswork out. You literally put in a ticker and they tell you if it's compliant or not based on all the scholars around the world. Super easy. We didn't have this before. Clients are asking, is this stock halal? I don't know. Let's look it up. Let's look it up and then determine if it is or not, right? You have that power. Use these tools and resources to your benefit, and just take action. Our table is right back out there. I challenge you to either text us to our office. It's all compliant and secured. Scan the code and make some time. 10-minute conversation. I promise you, it'll change the trajectory of how you're thinking of finance in this country, how the IRS law works, how the U.S. estate planning law works, and work with these partners that you see here and you hear from today, because they're the ones that are going to be in your corner. And if you really want to achieve those goals, then this is the team at your disposal. I'll leave you with this, like, I often say, I'm like the primary care physician, right? And then we reach out to the experts and the specialists, right? But if you come to me and say, my stomach hurts, doc, can you tell me what's wrong? I can't just do that. I need to check your I need to figure out your gastros. I need to check out your blood report. I need to do all this analysis. Same way with our finances. You give me a problem to solve. We'll reverse engineer this and we'll solve this math problem. How do you get to from here to where you want to get to? And what does that look like? And what effort you will need to do? I hope that concept kind of sticks with you today. That's what I'm really hoping that came here. I was like, you guys needed this point of view because we have so much information coming at us from social media or wherever else, that work with the right folks. It does make a difference. And just find a way to trust our brothers and sisters to be able to make that happen. Questions about anything and everything, just general. It doesn't even have to be a finance question. Yes, sir. Absolutely. Yeah. So the question was, is there a structure and an approach to how to encompass all of this? Yes, absolutely. This is the kind of like high level picture, but just like building any house, you're going to need project management, you're going to need materials, you're going to need to have the logistics and the timeline and the schedule down. And I get to articulate all of that. Timelines like, you know, if you're 50 today, what to do in your 50s to make sure 60 and what are eligible accounts that'll start paying you. Social Security early as 62. Do you want to do that? 59 and a half on your retirement accounts. Is it worth to do that? Right. So there absolutely is a structure that we get into detail, and it does take some effort on yours to open up and share in a confidential manner so that we can address that. Yeah. So part of the benefits when you're licensed, you have to pick a really nice broker to work under. So I chose two brokers under my insurance license. I chose New York Life Insurance to see how they use the insurance as the estate planning aspect of it, and then New York Life Securities as the broker to do all my investments. And if you wanted to have an IRA, 529, things like that. And a lot of the times we'll reach out to Wahid and Amana to kind of fit those needs because they have these great accounts that we can leverage and to use to be say, you want your IRA to be in a secure, consistent, halal fashion. Here's a fantastic option with Amana. A 529. You can have it with the state. You can have it with other agencies that are Muslim agencies. So definitely should, you know, so we reach out and we work with them. I did a couple of seminars with Amana Funds just last week at a couple of mosques. It's a team effort. We're both here educating and making sure that you have all the resources at your disposal so that when you do go to make that decision, you've already kind of vetted that out. And we don't charge our time or fees or anything like that. It's literally come sit, talk to us. We never may do a single transaction together, but at least now you got an Indian brother or a Muslim brother that can at least talk to you about this, that's on the same level as your value system, right? I mean, that's the important thing for me is I would rather you know what the options are and then go and do that with another American lawyer, American company. I don't care. If that's what you feel comfortable with, go for it. But at least you were educated enough to make that right call. That's where the mistakes I see happening is we just don't, oh, you know, I don't want to share anything with him because he might tell somebody in the community. I think everybody already knows what your financial situation is, but it's just, we got to get past that to be able to trust each other, right? So thank you. I appreciate that question. Anybody else? I'll be in the back. Yes, can I take one? Or he had one in the back. My time is up, but I'll take yours and then I'll wrap up. It does. Yeah. Yeah. So what, you know, we have to go to the experts, right? So I'm not a scholar. I'm not going to be the one that says this is halal or haram or none of that, right? I'm here to tell you about how the laws work in this country and what you need to be able to do to make that work for you in this country. So when we get with scholars or, you know, sheikhs or whoever that understands that aspect of it, and then I kind of give them the legal aspect of how the insurance structures work in this country and which variations is appropriate and not. then the client has to make that moral decision for themselves to say, will this fit into my estate plan? Will this be necessary? And if you are comfortable with that, with talking to your imams and whoever else that you need to vet this out with, then the action item is on you to be able to say, you know what, I understand how this works now. None of this thing in the US that I do is 100% halal anyway, which we've kind of had that credibility already. It's how do we use what we have to mitigate as much of it as possible. So one of the strategies is like somebody who has a 3% mortgage, they're like, man, I got to make up this 3% somewhere else. I don't want my earned income to pay for that interest. Great. Put some of your hard-earned money to work, and if it's in your pension, make sure that that cancels out this. So your principal is not affected. Are you comfortable with that approach? And if they are, then great. We have a plan in place to say, here's all my negatives that I'm doing in this world. Here's the things that can offset it beyond my control because I can't pick my pensions or my mandatory contributions. Then fine, maybe that's something that we can mitigate to put into your financial house to say, are you balanced on a pre-tax, post-tax, halal, non-halal? How are we going to mitigate this? That's what we do in-house, is to provide that level of detail to say, here's where you're at. You okay with this? Charles Schwab having an account there and say, I'm invested in halal options. Great. Charles Schwab itself is not a halal company. So how do you feel about that? Hosting your money where it's not appropriate, right? Those are the moral decisions that you'll have to make. We just kind of bring that to your attention. So I'll be in the back and I'll address more things in detail. I can't, he's telling me to get off stage.
One moment. If there's a short answer to this, how do estates and wills work and how does one address it? Sounds like a loaded question. Came from the online audience. Is there a short answer to that?
The shortest way I will explain it is if you go to and again, this is another resource for us as Muslims. There's this website called shariawiz.com. They've basically provided Muslim lawyers have came up with a way with working with Azad to figure out how can we bring this to the mass audience. So they've actually brought in a cookie cutter. If you can do TurboTax to file taxes yourself, you should be able to go on shariawiz.com and fill out your entire estate will documents. The entire package is done. You get to print it out in a draft format, so you can actually take it to a lawyer to vet it out if it's legit, and it's a fraction of the price. So there is ways now. We as Muslims have more options available today than I did just a few years ago, right? I didn't have this estate plan document, and then now literally it took me like 30 minutes to get on there with my wife, and we knocked it out. And then printed it out, went to the UPS store, notarized it, and it's official. I feel so much more comfortable knowing that that was done. Amana has these services, Azad had these services. Just reach out to your partners, right? And whoever you're working with, we have these resources available to you. So there should be no reason why Amana's coming up next. So,
Thank you.
does that work? Yeah, absolutely. Come see me at the table.
Okay, thank you so much, Jazakallah Khair, for that presentation. Love the analogy about the house. You don't want any leaks in that house. So inshallah, next we will have Brother Munim Salam, who's the Executive Vice President and a Director of Saturna Capital. His firm manages over $7 billion in assets. And he has an MBA from the University of Texas. He has worked as a Chief Investment Officer for ITG and Associates, and also worked at Morgan Stanley until joining Saturna Capital back in 2003. Brother Munim is an adjunct professor at IE Business School, speaks at Islamic finance and investment conferences worldwide. He's also a co-author of A Muslim's Guide to Investing and Personal Finance. Brother Munim has also authored chapters on Islamic investing in both contemporary Islamic finance and Islamic capital markets, and he contributed articles to leading Islamic financial magazines. As a mark of recognition for his achievements in the Islamic economy, Brother Munim has been ranked among 500 of the Islamic world's most prominent and influential leaders by Islamica 500 in both 2015 and 2019. So alhamdulillah, we're very blessed to have him as well as our other speakers here today. So without further ado, please welcome Brother Munim Salam.
Assalamu alaikum. Bismillah, alhamdulillah, salatu wassalam, rasulillah, in the name of Allah, All praise is due to Allah, prayers and blessings be upon His Messenger Muhammad sallallahu alaihi wasallam. It's really great to be here in the Bay Area on a beautiful day. Thank you very much for coming out, for those that are here in person and the ones that are online as well. My name is Moneem Salam. As a brother mentioned, I'm Executive Vice President for Saturna Capital. We are the investment manager for the Amana Mutual Funds, if you're familiar with us. What I'd like to do today, inshallah, thank you for the previous speakers for sharing a little bit, and then afterwards also there's going to be a lot of topics on real estate and that type of thing. I'm not going to talk about investments per se. I'm actually going to be talking about leaving a legacy. Alhamdulillah, after you've built up your real estate empire and you have your 401ks invested and all of these different things, what do you do after you've taken care of your family with the money that Allah subhanahu wa ta'ala has blessed you with? And that's what I'd really like to be able to talk about today. It's not clicking. Had this like powerful next slide, sort of transition into it, and technology kind of blew it. Just kidding. If you could just move it around, that would be great. And you can skip the next one. This is basically, yeah, there you go. So Saturna Capital, as I mentioned to you, we manage the Amana Mutual Funds, roughly about 6.8 billion under management as of last year. We run different companies as well. We have, as I mentioned, the Amana Funds, but we also run a brokerage company. We have a trust company. If you're looking at a corporate trustee, we do offer those services as well as we have an office, and where I was for about 8 years in Malaysia, where we run institutional money and some money for retail as well. So let's go to the next slide. So what is planned giving, right? Planned giving basically is really the idea of giving, but doing it on a planned basis where either you're doing it within your lifetime, but you're doing it in the most tax efficient way possible. But also it's about planning for what's going to happen to your assets after you pass away, right? As we know, as Muslims, about 1/3 of our assets, you're able to give to whomever you want, as long as they're not your heirs, the ones who automatically inherit from you. So you can give it to other people, you can give it to nonprofit organizations, and that's what most people end up doing, is they give it to charitable purposes, whether it be to create their own endowment with the ones that they have left over, or they give it to the masajid, to the nonprofits, all of those different types of things. So planned giving basically is really thinking about giving, but on a planned basis. And again, like I said, you can do this in your lifetime, or you can do it afterwards as well. Next slide. So as I mentioned, what is the benefit? Number one, it's basically, it's an opportunity for you as a taxpayer to be able to lower your taxes. And there's multiple different strategies to be able to do that, right? You basically can, if you're doing it within your lifetime, you can trade your charitable giving with a long-term income, and you work with the charity to be able to do that. And I'll talk a little bit about that as well, right? And it's an opportunity for you to be able to give money when maybe, in maybe even in your lifetime you weren't able to do, because majority of the people, their significant portion of their assets is actually tied up in fixed assets like real estate and those type of things, where they can't, automatically just go ahead and give that in donation as well. Next slide. What is planned giving from a nonprofit perspective? And if there are board members here, highly recommend, kind of thinking about how to come up with a planned giving strategy for the community members or for your donors and those potential things, because these gifts are transformative, right? So when you go out and you do fundraisers, and alhamdulillah, even in communities that are out there that can actually give in one fundraising night $1 million, there's a lot more money that's tied up that you weren't able to raise for operational or capital projects. How do you tap into that money? How do we tap into the real money that maybe people have that they might not want to give now, but they do want to give after they pass away? Giving that in the form of an endowment, in the form or a waqf, if you want to call it, giving in the form of large estates. A lot of the universities around the country, actually a lot of them don't even accept anymore any large cash donations unless it's for a capital project. All they want you to do when you talk to them is to say, write us into your will, and that's how we're going to collect our money. And it might not happen over 1 year or 5 years, but eventually, right? People are going to die, and when that happens, is that when that person passes away, that's a significant form of assets that charity raises from people that are passing away that have left something behind. And not in that particular case, you know, you're going to begin to see significant assets, sometimes in the form of, you know, $500,000, $1 million, sometimes even more than that. So that's the benefit for the charity to establish some type of a program to be able to do that, right? The other part of it, oh no, keep going back, go back. There you go. You know, the other part of it that I mentioned a little bit earlier is that how do you tap into a different wallet share from you know, from a charitable purpose, a different wallet share than they normally tap into, which is, you know, your cash donation, or I charge it on a credit card, or my stocks, or those type of things. Okay, now you can go on. So the you know, I just want to very briefly talk a little bit about some common type of giving that you can think about doing. This is very basic, so you know, maybe you need a little bit more questions on this. Maybe there's another strategy that might work, but this is something very common that people use. Next slide. So the very easy one, as I mentioned to you, is a bequest, right? And that one is you do this through your will. And as I mentioned to you, as the Muslim, we're allowed to donate or give away 1/3 of our assets to any person or anything other than those that are already going to automatically inherit. So what do you do with that, right? Think about it. Sit down with your spouse, with your family, and say, you know, alhamdulillah, Allah subhanahu wa ta'ala has blessed us with a lot of wealth. Yeah. So what do we want to do with this 1/3? Do we want to give it all to the masjid? Do we want to maybe even create our own endowment where the board members are the family members, and we decide on a yearly basis after we passed away, after I passed away, my wife passed away, my children can decide where to do that ongoing gifting in the future. And then this is the way for us to be able to again gift after death. Next slide. Right. So one of the ways you can do that, and this is something that can benefit, is that what's called, and these are all different type of charitable trusts. So again, you know, this is very basic, but it is something that I think any charity can adopt and come up with a program where they're actually helping their donors think about the strategy to be able to move forward. Number one is the charitable remainder trust, right? From the purposes of the person donating, supposing you have very significant appreciated assets. Now, obviously, you're going to pay you know, taxes on that when you sell it. You might need that money or that savings for income purposes. So what you end up doing is you create this charitable lead trust, right? And you donate those assets into that trust. So the trust is actually a charitable organization. So you donate the assets into that trust, and then after that point, the trust will, or the charity will invest that money in the trust, and then you will get the distributions or the gains of that for your lifetime. Once you pass away, that money that was there, that goes to the charity. So imagine if from a masjid or a nonprofit organization perspective, I have these charitable trusts and the standard documentation on my website, right? I'm gonna ask my donors to be able to create these trusts, right? Your significant assets in there. Now I have assets to be able to hold on to until that person passes away. So this captive assets, I'm going to be investing that money, giving it, you know, to the individual for their income purposes in retirement or whatever have you. And then when they've passed away, then now as a masjid or charity, I'm basically getting those assets. It's a very good, effective way to do that, and a lot of charities in the U.S. Actually end up doing that, right? So that's kind of the way that we end up doing. So if you are a board member and you do want to implement something like this as a strategy, you know, please don't hesitate to reach out, and we or somebody else will be able to help you to be able to do that. Now, the opposite of a charitable lead trust or charitable remainder trust is a charitable lead trust. So let's go there. Next slide. So the charitable lead trust, basically, again, you're basically donating the assets into a charity. This time, you're the one who's managing the money. And so the income from there goes to the charity. And then the remainder at a certain endpoint, let's say 5 years, 10 years, 20 years, whatever it is, that money comes back to you or the family whenever that event happens. And so that's the opposite way for you to be able to get a tax benefit immediately. right? Still be able to get those assets back, but in the same time, for that period of time, the masjid or the charity is actually getting some kind of a revenue or income stream to be able to support themselves. Okay, next slide. And I'll be done fairly shortly. So, and one thing that was very briefly mentioned earlier was about donating appreciated stocks and mutual funds. Now, alhamdulillah, let's go to the next slide. You know, a lot of us, you know, have been able to live through an unprecedented time when the markets have gone up. You know, who knows what's gonna happen in the future? But you know, having double-digit returns over the long run usually is not very realistic in the market. It's usually higher single digits, but we've had a good time. So you might have a lot of embedded capital gains in either your mutual funds, in your individual stocks that you own, in your company stock, those type of things. So one of the strategies that I want to highlight to you, and it was like, as I mentioned, it was briefly mentioned earlier, from now on going forward, if you have these assets that are appreciated, if you sell these assets at any point in time, you're going to pay minimum 18% on a long-term capital gains basis. So how do you avoid that? So if you have $100,000, $18,000 will go away in taxes. How do you avoid that? From now on, right? If you have zakat that's due, if you want to donate to a masjid, rather than giving cash, take the stock of the mutual fund and give it to the masjid as a donation. And then take the money that you were going to give and buy the same mutual fund, same stock back. Now you've actually raised your cost basis up to the point where you bought it, and now you start over as far as the taxes are concerned. Right? Now you've eliminated all the taxes because you don't have to pay because you donated. The masjid or the charity doesn't have to pay taxes because why? They're a charity. And so now you've basically eliminated the tax burden away, perfectly legal to do it, and you'll be able to benefit not only the masjid but also yourself in being able to do that. If your nonprofit does not have a mechanism to do that because you do need a mutual fund or a brokerage account to do it, then tell them to set it up. It's very, very easy to do. They'll benefit from it, and so will you as well. So I highly recommend being able to do that. I think I'm coming towards the end, so let's go to the next slide. Right? And the last thing that I wanted to mention is donor advised funds. Now, donor advised funds, if you're not familiar with them, are basically like an umbrella charity organization. So basically what happens is, for example, in the Bay Area or in the nationally, there's an organization called American Muslim Fund, right? Or American Muslim Charitable Foundation. So basically what they've done is they've created a charity, and inside of the charity, whenever you give money to them, they can open up accounts, and it's their accounts, but they'll designate your funds to your either individual or family or those type of things. Okay, so once you've donated there, then now they're basically, now you're advising them as to what to do with that money. You can either invest it, you can give it away to a certain masajid or charitable organizations, those type of things. This type of donor advised funds, what I tell people is, this is, for me at least, I have one, is a poor man's pension fund or a poor man's a private foundation. And the reason is because there is costs involved, but you're basically, the costs are being covered by the overall charity, right? You don't have to give away the money every year. You can keep it in there for as long as you want, and then eventually be able to give it away, right? You can have, for example, have the charitable or this donor advised fund, and every year, for example, have your children get together and say, okay, who do we want to give the money to this year? Or maybe not give it to anybody and just leave it. That's perfectly fine too. But then you're creating this idea of charitable giving, philanthropic giving, rather than just whatever it is happening on an individual basis when you go to the masjid every single day. So again, donor advised fund, you can do it for, you have at the end of the year now, you have a tax event coming up, you can donate the money to the donor advised fund. You don't have to designate a charity right away. You can wait until next year, or you can wait until 2-3 years from now, and you can have that money invested in the market to be able to appreciate, and then eventually be able to give that as well. So again, a very good strategy for you to be able to use. And I think that's my last couple of slides, right? Okay. So as I mentioned, I wanted to keep it short. I'm happy to answer any questions anybody has on a brief basis. If not, then jazakallah khair for your time. Anybody? Yes.
After transferring the stocks to donor advised fund, can he invest again?
Yeah. So the question was, is that, can you donate stock into a donor advised fund, and can it be reinvested again? And the answer is yes. So you can basically tell the donor advised fund that I'm advising you. It's only advisement, but most likely they will listen to your advice. You'll say, I'm gonna take the stock, I'm gonna donate it into my subsection of this donor advised fund. I want you to do X, Y, and Z. One could be you can say, I want you to leave it in the stock that I have. I want you to sell it and buy it into some mutual fund, I'm on a mutual fund or something like that. You can direct them or advise them as to what to do with that money. And that's kind of the idea of the donor advised fund. So you don't have to automatically give it away. By putting it into the donor advised fund, you've already had, it's a charity, so you've already gotten the tax deduction for being able to do it. Make sense?
Another question here.
Yes. Yeah. Yeah, it's for life. Yes. It's the remainder, meaning the remainder after you pass away. Yes, sir.
Talk about lots of different vehicles.
Yeah.
Your organization help
Yes. Yeah, we can help you. We can provide you with lawyers that can do that. The ones that I mentioned are very, very standard. Everybody uses them, that type of thing, right? The more you want to make provisions on them or make it a little bit different for yourself, then you have to now begin to consult somebody as a lawyer or something to be able to kind of craft it the way you want to. But these general forms are very, very easily accessible in the public. And we can help you to do that. Anybody else? Yes, sir.
your money and keep it in the charity. Why would I do that? My stock plan.
So in the charitable lead trust, right? What's happening is when you give that, let's supposing you bought, let's supposing it was an employee stock purchase plan. Let's supposing, you bought Apple at $1 per share. Now it's at 170, right? So now you have a fairly big embedded capital gain. And so what the charitable lead trust does is when you take that Apple stock and put it into the trust, now you've shifted the tax burden over to the charity itself, right? They're not going to pay taxes. They're a charity. The trust is a charity, so they're not going to pay, and that's why you would do that. Yes. There's an IRS formula, and that's dependent on a couple of things. How much money you're going to take out, right? Or how much money you're going to give to the charity as you take it out. The second thing is, in what time frame are you going to take the money back, the lead part of it? Because the remainder has to be given back to you. So if you say, obviously, that I'm going to wait 20 years, right? That's going to have a different tax burden than if you say I'm only going to do it for 5 years. So that's all formulaic by the IRS to tell you that. So yes, you're deferring it, but you are getting a savings along the way as well. Okay. Anybody else? Okay, Jazakallah khair for your time. Thank you so much, and we'll turn it over to the next person.
I think he deserves another round of applause, folks. We've had 3 great sessions, so I just want to pause a little bit. So we had Brother Safdar, for those of you who joined us a little later. Brother Safdar Alam joined us from UK remotely, did our opening talk. He's the founder of WahidX. Then we had presentations from the founder of Haya Financial, Brother Shakib Kundiwala, and then our wonderful brother Muneem Salam just did his talk now on leaving a legacy. We still have some great topics that we'll be covering, riba-free real estate investing, why we need Islamic finance in the US. There's a session on crypto, and we have Amin Housing as well that is coming up next. Before I bring up our next speaker, a couple of things, a little disclaimer. This event is purely for educational purposes. We ask you to, speak to a qualified or a registered investment advisor before you make any investment decisions. This is purely for educational purposes, and someone like Brother Shakib is a qualified registered investment advisor. Otherwise, everything else is educational, for community benefit. And the organizers, the volunteers, the hosts are not responsible for any of the decisions that you make. We ask you that you do your thorough you do your due diligence. Want to thank Monim again. He fed me in Bellingham when I visited him. He fed me in Kuala Lumpur. It was great to have some tacos with him yesterday. Just an amazing person, manages multi-billion-dollar portfolio, but very humble, very down to it. And he and Uwais are, I think between them, they probably visited a couple of thousand Islamic centers, talking about Islamic finance and educating the community. So Muneem, greatly appreciate you coming down all the way from north of Seattle. Bellingham, I think, is in the border. Really appreciate your talk. Now we're going to move to another organization that is one of my favorites. I think these folks have done a phenomenal job for the community, for Islamic finance. And if you think of it, right, about 10, 15 years ago, everyone got excited about fintech, peer-to-peer lending, peer-to-peer investing. But the folks at Amin Housing, they envisaged peer-to-peer investing more than 20 years ago, right? More than a couple of decades ago, where a few community members got together and said, let's solve this problem where through an interest-free, through a riba-free way, you could be able to buy a home for yourself. You could be able to invest and get a halal dividend quarter after quarter, year after year, right? And through this volunteer organization of a handful of people, they built an institution, alhamdulillah, that hundreds of people have been able to buy homes through their program, right? It's been a great inspiration. One of the reasons I did this Halal Money Forum is I 15 years ago, I read a book called Broke America, where it spoke about people, living in, the Midwest or, many of the other cities across the US, where they'll take a payday loan on high interest, on high riba, and sometimes they're not able to pay back that loan and they end up losing their house, right? Because the fees and the interest and all of that accrues, and they're living in maybe at that time a $50,000, $60,000, $100,000 home gets taken away from them because of interest, right? And then you have organizations like Amin Housing who, have built institutions where, they've solved a very, very crucial problem. Brother Muhammad Mustafa is very dear to me. He's a gem in our community. A little bit about his background. He's been a long-term board member of Amin Housing. He's continues to serve the organization. By background, he has a master's in electrical engineering from Cairo University, a PhD. He has a PhD in electrical engineering from Texas A&M. He's worked for some great companies like Broadcom and Rambus, now at IDT, and he's now at AMD. Done a phenomenal job for Amin Housing. We've done presentations, many years ago at different masjids, and it was beautiful to share this program. So today you're going to learn about, Amin Housing, the spotlight on Amin. Without further ado, let's hear from Brother Muhammad Mustafa. Let's give a round of applause.
Let me try that if it will work. Assalamu alaikum, everyone. So I don't think I don't know, he's spoken everything already. I don't know what to speak. MashaAllah, he did a great job on presenting Amin Housing, but Bismillah, alhamdulillah, salatu wassalam ala Rasulullah. I think just want to correct one thing Tanveer mentioned. So first of all, I used to be in a board. 7 years ago, I was the treasurer for 12 years before that. I am not a board member anymore. I'm only here as a volunteer base, and I will always continue to be always as a volunteer for Amin Housing. I'm one of the big believer of the mission of this organization, of the people working, and many people you will see sitting here are also volunteering doing for this. I mean, most of these people share that this is for the sake of Allah and our time and our effort. Inshallah, may Allah reward all of them, and hopefully myself as well included, for all of that effort, inshallah. So let me try if this will work. And it does work, inshallah. Okay, I'll start by a simple ayat from the Quran. أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. يا أيها الذين آمنوا لا تأكلوا الربا أضعافا مضاعفة واتقوا الله لعلكم تفلحون واتقوا النار التي أعدت للكافرين وأطيعوا الله والرسول لعلكم ترحمون. O believers, do not consume interest, multiplying it many times over, and be mindful of Allah, so you are may prosper. Guard yourselves against the fire prepared for the disbelievers. Obey Allah and the Messenger, so you may be shown mercy. So, as part of Amin, when we were searching for something that we call it halal, okay, long time ago, many of the people introduced a certain model for how to buy house, how to finance house. And we thought it is halal. And we actually had some shuyukh to told us it's halal. But we said we were not happy with that enough. We said, none of us are scholars by any means. So we reached to these scholars, okay? And to us, I think in North America, we have AMJA. I think most of the people knows AMJA, what this AMJA is. I mean, those are the most knowledgeable scholars in North America. And we invited a couple of those scholars to us. We explained to them, this is our current model. Okay, please correct us if something is wrong. And indeed, they found something wrong in it. Okay, and then None of us were there to do something for ourselves. We were there, as I said, for the sake of Allah. Every recommendation they told us to do, we did. Okay, and then when the AMJA hosted all of this organization, and this is one correction that I think the first speaker, brother, I forget his name, the Wahid, he mentioned about AMJA's that conference, and they mentioned about that none of American organization was halal. Actually, I totally object that. Actually, go to the AMJA fatwa. The only Islamic finance organization was that is called Mubah, which is mean allowed to use, which is the highest ranked from a halal point of view, was Amin Housing. Okay, the only thing that I think I would call it our own fault is that we are not reaching out away from California. We still mainly a real estate investment trust in California. We just started to expand in Texas right now, but we need to reach more. When I was in the board, I was actually having a lot of people, believe it or not, calling us not from America, from Australia, from Russia, from Europe, to say why you guys are not there. Okay, we need to be there. But we need to cover our backyard first, inshallah. So as we said, it is 100% Sharia compliant, alhamdulillah. And I already mentioned that we already actually the first Islamic real estate investment trust in North America, and actually in America, not in North America. There is one company in Canada that actually was before Amin Housing. It's all about those three things. Okay, it's investment, it's buying homes, it's refinancing homes. I will explain more in details about it. One of the big things that I don't think anybody can compete with Amin Housing is our track record. We have been serving our community for 27 years. Okay, to my knowledge, we don't have any organization have that great record of consistent profitability. Okay, for 27 years, we never, mashallah, Allahu Akbar, we never had a single quarter of loss during all of operation of Amin Housing, which is from an investment point of view. I am right now an investor. Okay, I will explain more why I did that. I call it diversity. People call it diversity. I want also to say, don't put all your eggs in one basket. But I had all my eggs in one basket, which is Amin, for a long time. And I was trying something else. I said, maybe this is scary. And I took part of the money out of Amin, put it somewhere else. Something they claim similar way, similar models. Okay, smaller track record. Unfortunately, I lost money. Okay. I think that's part of the reason this first bullet is super crucial. I work hard. Most of us work very hard to get our money. So don't throw it away from untrustable people. Okay, and avoid pyramid schemes, which I think hopefully people knows what pyramid schemes mean. So as I said, this is our, mashallah, we have now 154 million in assets. Okay, this is alhamdulillah. We have already served more than 200 people in trust already, mashallah. Okay, why invest in Amin? Number one, we already mentioned it. It's halal, alhamdulillah. It's mubah, right? So you cannot beat that. When I put money, I want to make sure it's secure. I personally don't risk. Okay, I'm maybe an old-fashioned guy. I don't want risk in my money. Okay, I work hard for it. I don't want to waste it. Okay, we have the fund is secure in home equity. Part of it because we ask the home buyer to make sure that you have 20% down payment in that house before we invest the 80% remaining. Okay, so that's a lot of cushion. That is a security for the house itself. Okay, the title is always called, because this is the whole model of Amin, is about partnership, right? So the house is actually owned by two persons, two entities. Amin Housing plus the homeowner. Homeowner can be institute trust, it can be two people like a husband and wife and so on. Okay. Number three, which is something very good in Amin. Actually, I love that personally because sometimes I need to move money. Okay. Amin, you can get from your own fund, investment fund, up to 100K within 48 hours. Okay. Most of organization will tell you, no, I already put that money in a house. I cannot go. I can give you bricks if you want. Take maybe a roof, part of the roof or something on the part of the swimming pool that I have, but I get out to give you money. Okay. Alhamdulillah, part of, mashallah, being in long serving, we know what our members need. Alhamdulillah, we can serve, and we have been doing that already successfully with our member. They need up to 100K. You will get it within 48 hours, inshallah. And again, I told you about the 27 years of very decent ROI. Okay. I like one thing, brother, forget his name again, the CEO of Wahid X. One thing he did, which is we do exactly the same thing. He mentioned about the example of the Mormon community, that $1 of the Mormon people, right? They circulate between 13 of them before it goes. Look at what Amin does. We do the same, right? We don't deal with banks. We don't get funds from banks. We don't get like this, right? Our funds came from Muslim brothers, sisters, okay, trust. This is our money, how it comes. That's why I am personally here, and many of the people here are. We seek your investment, okay, to help the next person, the homeowners, right? Because the homeowners that we serve, they put up to 20%, actually not minimum 20%. They can put more, okay, for the down payment. We need to help them to get that the halal way, the most halal way, which is Amin Housing serving that. This is how you get that money. You fund it to buy the houses, okay? The home buyer, the homeowner, okay, will pay rent. Part of that rent, let's say the 80% example, is Amin portion, which is your portion, your money, your fund. This is the ROI that comes back to you, okay? And that is what is a dividend distributed to the investors at that. Track record. This is where the whole Amin Housing is all about. ROI, right? Look at the curve. Look at consistency. Okay, and we had that, mashallah. It's longer. I just like if you distribute it across the 27 years, you cannot zoom into the numbers. But maybe next time, inshallah, we'll show even before that. But you see, it's very consistent. It's roughly, I would say, if you take the average, maybe 4.9 or so. Again, you can plus or minus. Okay, it cannot be constant. If it's constant, then there's something's wrong in the model then. Okay. This is how the asset is being grown, alhamdulillah. And actually, my personal goal, okay, even though I'm not part of the board right now, but I want this to be more exponential than that. I mean, I feel we are not doing enough outreach for the people. I mean, the more the people will know about it, I expect these things, inshallah, will rise much more, inshallah, and will help more people to own the halal way of their homes, inshallah. Now, let's say, I mean, hopefully some of you are convinced to be a member, inshallah, to be an investor. This is how to be an investor. Very simple. Go to our page, download the membership form, fill it, send it. Today, to be an investor, all you need minimum is $2,000. Okay, please do more than that. I think most of you can do more than 2,000, inshallah. So do more. Okay, there is only $100 non-refundable fee the first time, and that's it. We don't have any more charge of this, inshallah. Again, and just mail it with your driver license copy, and then just mail it to us. You become a member. Very simple. Okay. Now, how you want to buy it? If you want to upgrade your membership to buy a home, again, the same web page. There is a form to apply for it. However, if you want to put yourself in the what we call it waiting list, or waiting list, it's a waiting list at the end for buy homes. You need to have at least 50K in your account, or 10% of whatever amount that you ask it for, whichever is less. Okay, to be eligible to be in the waiting list. Basically, you are somebody who's many interest really want to buy homes. You have to be sure that you are correct, ready to it, basically financially. Refinance, same thing. The only difference now, most of the people, when they want to do refinance, they don't have cash, right? They have more assets. So we distribute that differently, so that 20% can be minimum only 5% in cash in that time, okay, and the remaining can be basically more assets, okay. But minimum is 5%. You can put more, of course, but minimum is 5%. This is just an example of how we do the whole buying homes. Okay, it's very straightforward, very simple. I just made some simple examples. So let's assume that the house is $1 million house. The member put 200K. Amin will put 800K. Okay, so part of Amin is all about pure partnership. We are partners. We are not doing loans. We are not in business of loans. We don't give loans. We are partners. We have to always deal as that. Okay, so part of that is that since the homeowners, we ask them to pay their insurance, their property tax, which is a good thing, because at the end you can claim that as for against your taxes, right? but then why Amin is not contributing anything? We claim they are partner. No, we do partner. The way we do it is that we discount the rent by 7%. And this is the way we say, I'm giving you back partnership. My part of that is reducing the rent by 7%. That's our way of showing that partnership. It's getting better than that. Okay. Let's say now I go to home. I want to remodel my kitchen. I want a new roof. Okay. If you go to any other places, fine, go do it. I don't care. Right? Who cares? I mean, you're home, right? Go do whatever you want. But we cannot do that. If we truly claim that we are partners, then we have to partner that cost as well. We have to count that. So the way Amin does that, okay, and again, by the way, this is all the recommendation of our shield from Amgen, right? This is not our invention at the end. Okay. We said, let's just give a number, right? We said the person just did a new roof and remodeled their kitchen. The cost is 100K. Okay. They paid that cost. Then where is the partnership then? Okay. Then that 100K transferred to an equity immediately to the person's share. So that's a real partner then, right? We don't say this is your problem, go to fix it. It's not, we don't live there. No, but since it's a project, common project, guess what? Your equity immediately moved from 20% to 27%. Just do the math, right? Just that's more than fair, right? That's just basically being Sharia compliant. That's why we say that this is Sharia compliant. Okay. When the rent, again, I don't want to go to much in the numbers, but the rent, again, we distributed the 80%, whatever the percentage, that's what we go and we give to the investor as an ROI. The last part of it, since it's a partnership, think about it, we have a common project together, right? We need to say, we need to share profit and losses, right? So when the homeowners reach 85%, okay, that's today's percentage that I mean, it's going with, we need to say, what is our profit and loss? So we do another appraisal of the home at that time, okay? And basically, let's say just a simple example, like the house appraised more like 100K. In that case, there's a 15K, sorry, the 100K profit, right? But the homeowner owned 85% of that home at that moment, right? So they own 85K of that profit. I mean, since they are partner, okay, they eligible for that 15K. So that 15K is added basically toward the payoff at the end, okay? If there is a loss, let's just say the house appraised lower, okay, it's reverse. So I mean, actually will pay back to the homeowner 15K. Again, true partnership, okay? No games here. Okay, very fast, I'm closing here. This is our board members. I'm just highlighted again. They are all volunteers. Jazakumullah khairan for all their efforts, okay? None of our board members are paid. This means more ROI for investors. This is our staff today. With the exception of Brother Hassan, again, even though he's actually spending a lot of time in the office, okay, as an office manager, but he's also a volunteer. Jazakallah khair for that effort as well. Sister Salma, mashallah, she's almost like a co-founder of our Amin Housing. Has been, if anybody knows about housing, we always hear about Sister Salma. She has been there forever, mashallah. May Allah bless her and give her health and barakah. Brother Ahmed is a new asset to Amin Housing. Mashallah, he's doing an amazing job since he's joined Amin Housing a few years ago. And mashallah, they are doing an amazing job as a team. That's it. Jazakallah khair. I hope with it was, I'm very happy to answer any question about Amin. Yes, please. I don't know all of the details. Please talk to somebody in the office and they will give you that details. As I said, I'm only here just to spread the news. Okay. Yes. Alaikum salam wa rahmatullah. Yeah, it's a good question. Maybe for everybody, he's basically asking is he did his own comparison in South California, South Bay, I don't remember. What doesn't matter, someplace, right? And he said basically that he did his math between a conventional loan versus Islamic loans, right? Again, first of all, we're not in the loan business. Just keep that in mind. We are not loan business, okay? So basically, he said that it ended up to be more economical to go to than halal was. You know, if somebody come to me, tell me, you know, I tasted the pork is so delicious and cheaper than the halal meat. I don't know what to say. Sorry for saying answer that. But one more time, again, I'm sorry for saying it, but to me, actually, typically that's my honest answer. You know, I cannot compare pork to halal. I'm not saying it's halal meat mean like getting from halal chicken versus non-halal chicken, which is debatable, but I'm talking really seriously pork versus, you know, chicken. So it's simple as that, okay? I cannot compare that comparison, but actually I'm giving you the different story, okay? I tell you, when I used to serve in the board, many non-Muslims actually wanted us to go this, because at the end they did the math as well. For some reason, they said, this is better for me. Because if you go to the, again, all of this partnership, what I give you example, if you go to Bank of America, Wells Fargo, you do your roofing, does they care? You don't care, right? But we share that cost with you. So you cannot beat that. You cannot beat that. And especially if you're sitting 20 years in your home, that's most of the people by the time you pay your home, okay? Your house needs service for sure, right? And by the way, when we say sharing, I'm sharing big money. I'm not saying, oh, by the way, my light here, you know, get cut, please send me, share that light bulb. Of course, we don't do that, right? We do the big stuff. So I hope I answer my, sorry for calling like fun, but seriously, to be honest, I hate that question. I'm sorry to say that because I cannot compare pork to anything else. It's pork at the end, okay? Yeah, let's go for other people. I'll come back to you. Yes. No, the one behind you. Go ask you the question. No, because just be fair. So I'll come back. Just want to make sure everybody gets a chance.
So I'm investing 100K. How will I know what house was purchased and what is this rental?
Very good question. So he's asking basically what would be the rent of the house. Basically, again, it's not it's not the homeowner that does the rent appraisal. We go to professional people does that, and the homeowner, if he doesn't like the appraisal of the rent, there is a process of counting offer that he or she bring a new counter from professional people, and then we do the average. So it's fair. Okay. Again, we're not seriously. One of the things that I personally have a great thing is that we're not here business to abuse anybody. We are here as a community. That's the whole beauty of Amin. Since I joined, that's why people are volunteering for this organization. Okay, it's not because we want to take money out of it. Sorry, I need to be fair. So there was another question. Yes. Alaikum salam. So when you talk about how many homes that we do yearly, roughly this last year I think around 20 new homes. You mean like the waiting list again? I don't know what's the waiting list right now. I expect it to be long, by the way. I don't expect it to be short. And part of being here is to try to make that faster. Yes. And by the way, sorry, let me ask Brother Tanvir. I'm over.
Then they can ask.
Yes. Okay. Jazakallah khair. I can be very happy to answer. I have everybody on the table back also to answer more details question. But let's make that just an appreciation for everybody else, please.
The question that what's talking about how the scale
I love you, brother. Mashallah. Jazakallah khair for that question. Okay. So let me repeat it. You know, basically what prevents us to be more professional. Okay. Not depending on volunteer. And we are in the way of doing that. Okay. Part of, to have more professional people, as we call it staff, right? You need money. You need to be a bigger organization, right? Part of having more investment, okay, is to be able to, have more staff helping the 2 current staffing plus the volunteer office manager to do that. And you're right. We already, the last year alone, I personally, one of the reasons I was like on the side track for some time, okay, I came back to volunteer again because I'm seeing good stuff happening, recently, the last year. Okay, I'm seeing we are going to the right way. We are fast in process. We are advanced. We are doing great job. Okay, especially the last year, mashallah. Okay, that's why I personally am here. And with more fund, we will get that waiting list for buying home getting faster. Okay, and we hire more people to get this thing running around. Jazakallah khair, please. Again, there's a table in the back. Okay, if you have any more one-on-one question, I'll be happy also, and I have people here to answer the question. Jazakallah khair for you.
So much. You folks have been a great audience. I think we are more than halfway through our event. Excuse me. So there is, I think there's a very valid suggestion for a break. So let's do that. We'll take a 5-minute break, and then we'll, but let's not make it more than 5 minutes. So we'll start on the dot at 5 minutes, so you can freshen up and all of that. And again, when you get back, please, occupy the first, few rows. The last few rows, we'll charge you for it, like we mentioned.
Assalamu alaikum, dear guests. If you would please have a seat so we can start. So we try to finish on time, stick to the time. As Muslim, we're encouraged to do that. The brothers in the back, we can have you for the next session, maybe. Those who are talking in the back, if you would please have a seat so we can start on time. So we can also pray on time, inshallah. Please help us so we can help you. Thank you.
Thank you so much. Jazakallah. All right, we'll another 30 seconds or 10 seconds. If everyone can get into their seats, we'll get going. Bismillah ar-Rahman ar-Rahim. Again, you folks have been great guests. Appreciate everyone's cooperation. Our next speaker, Sister Reshma, needs no introduction within this community here at WVMA or the Greater Bay Area. She's she's an amazing bridge between different entities, different communities, different projects. Takes a lot of responsibility. She's involved with Open. Many of you know Open, which is the organization of Pakistani Entrepreneurs Network, probably one of the best professional networking organizations here in America and globally. She's involved in Open. She and Brother Amar Mohsen and their team run the WVMA Entrepreneurship Club. She's a successful entrepreneur herself, having done well in real estate and juggling between managing a family, and does a myriad of other things. She's been a big supporter of some of the things that we do with the Halal Money Forum. She's going to talk about some significant challenges that Muslim families face, right? All tied to Islamic finance. She's formed this entity which is known as Masrif, which is Muslim American Services, regulated under Islamic finance, right? So her topic today is, why is Islamic finance needed in the US, right? Why the US needs Islamic finance. Without further ado, I'd like to turn it over to Sister Reshma Haider.
Testing 1, 2, 3. Can you hear me? Bismillah ar-Rahman ar-Rahim. Assalamu alaikum. First of all, on behalf of Entrepreneurship Club at WVMA, welcome you all. How many are here for the first time? MashaAllah. But before I further start, I would like everyone to give a round of applause for all the women here. Not me, the one sitting here. As you can see, we are always the minority here. And although we are very fortunate to be here today and listening to all these amazing speakers, I feel so humbled to be part of this group. Having lived here in 33 years in the Bay Area, I have personally seen the growth of Saturna Capital, housing, and to see them here today just humbles me down that we are going in the right direction. And before I start, I wanted to just ask everyone to appreciate the contribution of the early Muslims, the ones who started the Sharia compliancy in America. So many of you don't know them, but these were scholars. They were people that were imams. They were people that were conscientious domain experts in finance that got together and kind of paved the way for us where we are right now. And let's not be critical of them, because it's not easy to start from beginning and enter in an area where to start the financial topic is to deal with riba. And that's what I had this up on the slides here today that I want all of you to read these ayah. Everybody knows Surah Al-Baqarah. It's the main surah, the longest one. If you are a mathematician, that surah deals with heavy mathematics, regulations and laws. One of them is, oh believers, fear Allah and give up outstanding interest if you are true believers. If you do not, then beware of a war with Allah and His Messenger, peace be upon him. But if you repent, you may retain your principle, neither inflicting nor suffering harm. I just want everyone to take a moment to reflect on this, because if we all are Muslims and we all know how to read Quran, and we try to abide by the principles ordained on us through the Quran and Sunnah, this is a main testament that should be part of when you are an adult, and especially some of the kids here. I wanted to share the story, my little story. In fact, today is would have been my dad's birthday. May Allah give him status in Jannah. When I was a child, I grew up hearing constantly from the parents that, oh, do not deal with riba. Parents would pray, may Allah keep me away from debt. And then they would remind us that the Prophet Muhammad ﷺ, the most common dua that he made was to protect himself from debt. And that has ramifications that are going to present day, and we can all relate to that. It not only does a socioeconomic impact, it has a mental impact, it has financial impact, it has the futuristic impact for the progeny. And with that, I wanted to address this of why there is a need for Islamic finance now in America. My focus is primarily in the Bay Area because as a 33-year resident of the Bay Area, I've seen the ups and downs of Silicon Valley. For those who, I mean, you all know, we all have our own economy, which is larger than many of the countries around the world. But that also comes with responsibility around wealth. You know, how do you grow your wealth? How do you share the wealth? How do you make sure that you set parameters that make sure that it's distributed, not just as an investment, which everybody knows revolves around, you know, portfolio of diversification and not putting eggs in the same basket, creating a wealth plan. All of that are things that are taught to professionals when you're in the business. But as a Muslim, how well do we know that historically wealth management, earning, all of that was also dictated through Sharia, and it grew. So going back to being thankful to all the charitable contributions and the contributions of scholars. For instance, we heard about mutual funds. Did you know that it's just started in the late 70s? 1979 was the first mutual fund form. There was a institution set in Malaysia, I think in 2013. The first Dow Jones was, may Allah reward him, Nizam Yaqubi actually started the Dow Jones fund. So as we grow, it's something to see that we have so many professionals here today discussing the opportunities that lie. But earlier this year, I came to know about a phenomenon which is called banking while Muslim. I was already dealing with wealth management because 4 years ago, I was placed in a situation where, having gone through 11 years of cancer care for my late husband, I was able to be confident that, hey, we did everything like what Brother Shakib discussed, you know, trust forming, will forming, retirement planning. Little did I know that there's a phenomenon called banking while Muslim. Has anyone heard of that? You know, and it ties directly with riba. So if you are familiar with the banking industry, it is literally run on riba. They take $10 and then they distribute the, you know, if you invest $10, the whole idea is about depositing and borrowing and lending on interest. And with that, if we are not taking care of our, like tying the camel, I don't know where we are. And this is the right time for us to consider Islamic finance from end to end. Just like Brother Shakib mentioned that, you know, when you see somebody for illness, you actually go to a specialist. How many actually have a hospital that is owned by Muslims, right? That's the basics. So if you're going to invest in Sharia compliant stools, are you starting with an Islamic bank? Do you know what lies around in policy making, regulations in Islamic bank that is not conducive to our value system? It is actually quite against it. So with that, I wanted to go to the next slide and share what involves in the life cycle of wealth building. You know, when we start earning here in America, we can start earning at age 16. I believe that is the right time to get the introduction to our kids that are earning importance of riba, importance of investing, importance of diversifying a portfolio. But the whole life cycle involves earning, saving, investing, spending, giving. You all heard the professionals that are actually giving you opportunities to utilize these different value system. But avoiding riba is something that is very much part and parcel of lifestyle. Sometimes we just don't know the expertise. We can go and ask experts now to figure out our benefits program. If you're working for a public company, you have employee stock plan, you have benefits. All of that involves a considerable amount of knowledge for you to start a foundation that is based on value system and ethics that you can grow on and utilize. But right now, as I speak, personally, the past 4 years, I have learned about some other things that maybe none of these people talked about is when you pass away, you expect to have a will, you expect to have a trust, you expect to have a legacy. But if you haven't prepared for that, good luck to you. The cost of probate, the cost of closing your accounts while you've passed away is enormous because each bank decides on their own what their policy is on estate planning. So here in America, when someone passes away, they actually create an estate plan, and that can take 2 to 3 years for someone to close once they have passed away. That itself should shock you because that's what I experienced when I lost my husband 4 years ago. And this is a very selfish interest. For my part, I don't want to die with my name still going on in accounts. And like the brother mentioned, this is California. We have a community shared. So between spouses, it's rather easier to close the account, but good luck with kids. If you do not actually factor that in when you have children, specifically dealing with wealth management and legacy planning, you're looking at an added burden on your children that they have to handle, besides having their own issues with their own spouses and children. And with that, I wanted to circle back to, oops. Are we going back to slides or going back to, yeah, oops. Can we? So how do you avoid riba and earn halal? Starts towards ethical and debt-free earnings. From our own faith, we understand that we have to do a middle path. So we have to look at value system, look at numbers. One of the good examples that I saw was this 2011 Starbucks revenue. 11.7 billion revenue versus $37 per American. It's a clear indication of spending versus wants. So we need to clarify early on what is our wants, what are our spendings. Because if we don't have a set rule, we'll fall into that buy now, pay later module, the consumerism, the capitalist market system, the credit system, all of that will just drain it out to a non-compliant system. I'm gonna try and do this again. Okay. The good news is, as you heard, Muslim entrepreneurship is all the rise. We here at Entrepreneurship Club have gone through almost 100 pitches. And between my open charter member group, it's so nice to see that there's a rise in digital marketplace, token economy. It's in every sector. Mashallah, Muslim leaders have faith-based compliancy knowledge to actually apply even at cap table levels when they're starting off a company and raising funding. They actually are conscientious about not getting into debt-based financing, kind of structuring their investors so that it's halal. And also the ethical part, the green part, the value system, the sustainability system, all of that is in play. It's alhamdulillah nice to know that this is in place. All we need as elders and community leaders to encourage and invest in people who are abiding by these. And if you happen to be an investor or an advisor, I encourage you to ask the founders, what is your ethical value system? Are you diversified in terms of your board and other things? We just also would like to help navigate Muslim entrepreneurs to stay true to faith, not let them stumble upon areas where they may have to succumb to non-Islamic values. One of the greatest examples, we're in Rabiul Awwal right now, is the Prophet Muhammad sallallahu alaihi wasallam. He was an influential, successful trader. He was, even before he got the wahi, he was actually known as Al-Amin and Al-Sadiq Al-Amin. Why? Because his principles were so valued in the market that people trusted his decision-making. Why don't we encourage and encompass these value systems from the get-go, whether we're employers or employees? We need to have those value systems instilled in us. I will actually also encourage people to consider investing. Brothers talked about diversifying your portfolio, whether you're planning a retirement put some money aside for investing. There are tax benefits to it. Alhamdulillah, we didn't discuss tax. That could have bored you guys, all of you guys down. There's tax benefits of investing in startups. There are tax benefits, diversification in real estate, and deductions in real estate investment. But the rise in digital economy is making ways for Sharia compliant investment opportunities. You could be sitting here and invest in something in Pakistan. You can invest in Middle East and reap the rewards if it's a halal investment. You could also be driving as a board member. This is something I actually encourage everyone, especially women. I serve on 2 boards. One of the company board, none of them are Muslim. I'm only non-Muslim. It's a real estate hybrid work environment board. But by being on a board of a company, you can also encourage no debt. You can actually be the voice to encourage sustainable ways, green ways, ethical ways that will only bring in more value system and more respect. As we heard the earlier speaker, VC investment in Muslim founders. Halal business is on the rise. Let's encourage that. If you are considering, you're sitting on the verge fence of starting a business because you think nobody will be there, there's a huge information on the reports you can search them on Google, on how evidence the current, oops, sorry, I went too far. The market is for Muslim consumers. So think of that product, come to us, pitch to us, and we'll try to get things going for you. But I wanted to talk about quickly before I jump into my introduction, giving efficiently, building a legacy is the key. Why is it important? We are in a stage, at least for my sake, I'm a grandmother. I'm looking for my grandkids' future. I don't want to leave my kids something that is untied, unplanned, that besides having to work and earn, they have to take care of their parents' stuff. So it's important to look into zakat, charitable giving, and waqf. I would not take too much time. I only have 3 minutes left. But the discrimination that's being faced in the banking system is huge. You know why? Because we do not like to keep our money in the accounts. And this is particularly to the charitable organizations. Did you all know that recently this year, 3 main charitable organizations were discriminated? Their banks actually told them to go away, close account, and move to another bank. And there's no way we can sue them. There's no way we can actually go after them. That's a testament for us to think about having our own bank, to think about our own policies, so we can at least value that system and let the charitable organizations remit money overseas, whether it's a disaster or just charitable organizations to any of the poor countries. We should be able to hold our value system in Sharia compliant inheritance. If you want to place your own Islamic inheritance, infidelity, you should be able to do that. I'm again speaking from experience because I have experienced firsthand with, I'm not just going to name the organization, but these top 3 brokerage accounts stopped access, although I was legitimately on the trust, because they have their own ways of guaranteeing or qualifying you to access your accounts or not. So this was a big blow for me to consider opening Masrif, which is Muslim American Services regulated in Islamic finances. The reason for that is that it's about time the Bay Area should own their own bank. We all have heard of those fiascos with Silicon Valley Bank and all the other banks that are closing. We need to create our own goal to set end-to-end service, from having the basic poorest of poor American Muslim have the comfort of having an account that doesn't cost them too much, to the charitable organizations. Again, I can talk to you later about the details of the revenue model, because I'm all about revenue, but survival. But it's about time we need to look into Islamic finances. MashaAllah, in Zabiria, we have masajid that have an asset value of almost $1 million. CARE organization is out of CARE SF, has about 17 million. We just heard, housing 154 million. MashaAllah, with all that wealth, isn't it time that we need to have our own bank and to serve the community and save our money where it is? That's the goal of the whole idea. I thank you again for listening to my rant. And if you would like to participate in Masrif and help me grow this bank and have our own money in our safe, secure way, please support ourselves. May Allah reward you for listening to me, and make dua that this becomes a reality before I pass away. Jazakallah khair. Any questions? I don't know if I'm supposed to take any questions.
We are out of time.
I'm not doing any questions.
Crypto speakers also.
That's good.
You can talk to Sister Reshma,
Thank you.
during the break, during our networking time. Please reach out to her if you have any questions.
Jazakallah khair, Ishmanti, for that. So inshallah, we're moving on to the next speaker. We have Sister Sadia Azim. Sister Sadia Azim is a long-term resident of the Bay Area. She holds a degree in computer engineering. With over 15 years of experience in the high-tech industry, she co-founded Serene Homes and Solutions, a residential real estate investment company in California. Presently, Sister Sadia serves as a board member for two nonprofits, for West Valley Muslim Association here and also Tawasso. So inshallah, let's so I'll give it up for Sister Sadia Azim.
Yeah. Yes, I have it. Thank you so much. Yes. Assalamu alaikum wa rahmatullahi wa barakatuhu. Can everyone hear me well? Thank you so much, first of all, Halal Mini and WVMA Entrepreneurship Club for having me here. As you heard, my name is Sadia Azim, and my another identity is also that this is my home ground. I am also a board of directors, so I welcome all of you to being here and making our this event successful, mashallah. So my topic for today is, okay, I have to go next. All right. Oh, so are you clicking or this is a lot of everyone everything? Pointed here. Pointed where? Okay. All right. But it jumps back to the previous screen automatically. Yeah, let's do that later. Yeah, look, you go ahead and I can put it away. You can move it to next. So as you know, my topic for today is riba-free real estate investment company. I would go next slide, please. So first of all, the disclaimer. So Serene Homes and Solutions is a licensed real estate investment company in the state of California. And we are not the licensed security dealers or brokers. And this slide will be solely for informational purposes. It will provide you more investment strategies and investments towards the real estate insights. Next slide, please. So the agenda for today is I'm going to talk about traditional investment vehicles, and out of those available traditional investment vehicles, what are available for us, and then why we should invest in real estate investment types and benefits, growth in riba-free real estate investments, how to become a riba-free real estate investor like yourself, and what are the competitive advantages of investing with us, or some common ways to fund our projects. So next slide, please. First of all, so these are all the traditional investment vehicles available. If anywhere, wherever you are in your journey, I'm going to talk about or give you 5 things how to choose your investment vehicles and what are the available traditional investment vehicles. So some of these are, and obviously we have plenty, but the ones you are seeing here on the screen are the most popular one. So like, for example, we have CDs or bonds, stocks and options, cryptocurrency, mutual funds, ETFs, real estate assets, annuities, collectibles, or coins. Next slide, please. But what is available to us as a Muslim? The ones that you see red crossed, so those are contains fixed interest, which is again leaves us with the remaining popular ones. The five things that I was going to give you why you choose your investment vehicles are, for instance, you have to first understand what they do, like what are their products. You do your due diligence to your best knowledge, take references, look at their profile, for instance, number 2. Number 3 is understand the risk levels of the investment vehicles that you are choosing. Every investment vehicle has risk. So for example, if any investment says no risk, yes, but that is not for us. For example, CDs. In CDs, your principal remains same and you continue to earn fixed interest. But for us, yes, you definitely have to understand the risk. Identify the risk, understand there are 3 types of risk: high risk,
medium, and low for sure. And each type of risk corresponds to rewards. So the fourth thing that I will give you is rewards. Consider what rewards are you going to get? What your ROI going to become after you choose the vehicle? Most of the times, there is no fixed formula, but most of the times, high risk investments corresponds to high risk rewards. So high risk corresponds to, so if there is a risk, sorry, high risk contains the high rewards, right? So, but yes, there is a high risk. Similarly, if something is a low risk, it may have lower rewards, less ROIs, but yes, those are less risky. So the fifth thing is, what will be your position in that investment? That is very important to know. Are you going to be the shareholder, for instance, in the stocks or cryptocurrency? Or are you going to be the equity share if it's a real estate asset? Or are you going to be owner or the holder of the coin or collectibles? So those are the 5 things. Next slide, please. The next slide talks about why real estate. So why would you choose? So you have seen different types of investment vehicles in the previous slide. Now I'm going to talk about why would you choose real estate investment. So I am bringing this graph from Fred. So Fred is Fred is actually short of Federal Reserve Bank, St. Louis. I have picked up this data from there. What they do is, the top left says Case-Shiller Index. So S&P Core Logic Case-Shiller Index is the most authentic resource in the history that they are tracking US home prices data across nationwide. So this is the graph you have in front. The data in this graph, I'm only going to just give you some food for thoughts. I'm not making any conclusions. It's all there. It's on the internet. So you can see this graph shows us more than 3 decades of the data. It starts from 1988 up till today, as you can see. 2-3 things that I will give you just some tips, but yes, you can continue to observe and make conclusions from this data. So for example, the gray bars, vertical bars that you're seeing on the graph are recessions. How many recessions we have in these 3 decades, and why I became a real estate investor. So while I was choosing my investment vehicles, I researched all these data because I'm from engineering. So what engineer does, they look at the data. So you look at the recessions and you look at the progression of this chart and the graph. Yes, when there is a recession, every investment, stock, highly volatile, obviously type, but every investment gets a shake. But again, it depends what type of investment you have chosen. But look at the graph over time, how smoothly it has been progressing. And then it was a double recession, 2008. Everything declined at that time. Yes, it did. But yes, it did not come to the rock bottom, but yes, it declined. But then it started recovering again. So that's one thing to notice. Next slide, please. The next slide actually is more interesting. Here, again, the same source. I'm bringing 3 types of investments over these last decade. Red is for real estate graph, as you can see. Blue is for stocks. And green is actually corporate bonds. So you can ignore that. Those are fixed interest funds. So we can look and compare the red and the blue. So the only tip again here is, we all say like stocks is a highly volatile, right? Which you can see here clearly. In stocks, you will see sharp turmoils, but then there is a sharp recovery, right? You lose money, but then you have gained money. Similarly, but if you compare real estate, you will not see sharp curves in the real estate historical graph. So real estate always takes time to come down and then recover, but it does not give you like sharp curves like in the real estate. Next slide, please. In this slide, I'm going to talk about real estate. So those are all the slides, just food for thought. I'm just giving you some real estate education, that why you should pick real estate and how does the graph historically looks in the real estate. In this slide, this is a very basic slide about the real estate. I'm sure everyone in this room knows there's a residential type of real estate and commercial. There are so many assets under each category. For example, in residential, you have townhomes, condominiums, single family. Then you have commercial. Commercial again have like 7-8 types: office buildings, retail buildings, hospitals, strip malls. So I'm not going to talk about that, but I'm going to give you one more new perspective here. If you have to start investing in the real estate, what could be the pros and cons? What could be the advantages or certain checks that you have to make, like check. So for instance, if you plan to purchase investment property, in the first box, you will be sole owner of the investment. You have to bring the full amount to be able to purchase it. You have to be an active manager, although definitely property managers will be there, but you still have to be active managing your property manager. So it's not you will not be free from any worries. You will be getting calls for anything. So, and for purchasing that asset, I would recommend definitely have some education, minimum, bare minimum. But if you won't have, you will learn as you go. But that can be very dangerous. You will be containing solo risk of the asset. It could be real blessings to you, and it could be nightmare. I do speak in the history of my career when I started as a real estate investor. We purchase actually nightmare properties, for instance, because we know how to deal with the real estate. We have education, knowledge, and experience. But yes, homeowners can be stuck with multiple problems of eviction, flooding in the house, mold have grown, lawsuits for X or Y, Z reasons. Then we have another type. If you plan to be an equity partner investor, what are the advantages for it? You will be investing some small amount or large amount or any amount based on your comfort level. You don't have to worry about any management. Oh, sorry. You don't have to worry about management or doing or having any real estate education. You don't need to work. You will be carrying the divided risk with other investors in that property. Most importantly, your investment will be secured by tangible assets, which is a real asset that you are a part of. You will be equity holder. And the best part is you will be enjoying mailbox money. When I say mailbox money, it means you just have to write a check, review the investment, and then you will be reaping the benefits. Next slide, please. So we can pass this slide. So the next slide is the most powerful slide, which is this. Why I'm saying that? So this is, I'm going to give you a tip about of power of compounding. How many like the idea of mailbox money, right? Show me hands. Are you still with me? You like the idea of mailbox money, right? How do you grow your mailbox money? And how many of you know, by the way, Rule 72? I think there are some investors here. You know Rule 72. Okay, very good. Just one person. Does anyone else know Rule 72? Okay, very good. So this is the slide where you can plan how you want to do your investment. This extra money will allow you to maybe save your tuition for, maybe it makes you debt free for your college, for your high schooler or a student. It may give extra money for your rainy days, but how do we calculate? Rule 72 is actually divide your ROI, like whatever your desired outcome. It tells us when you set aside any specific amount for any reasons and need, or for your retirement account, or for your helping your parents, and for your college education, for your kids' college education, this allows us to plan our roadmap for investment. The way it does work is divide 72 by the desired ROI that you may be intending to invest in any investment vehicle that you choose. Once you choose, this is an example, like we have set aside, for example, $100,000 now. When it will get double. So you will divide 72 by 12. The number you get is 6. So it means in 6 years down the road, if you start investing from today, 100,000, your money will get double at the year 6. So that's the power of compounding. And then after 6 years, when it gets double, after another 6 years, year 12. So like, who do not want to have this extra money or mailbox money? If you have any money, inherited money, any money, just set aside and start thinking, what do you want? And that's another example, although it's an interest saving banks, but yes, you can put any number here. If the investment vehicle you have shows they're giving you 8%, you can have another column and calculate that when you will get your money double. Next slide, please. So the next slide is about, since Alhamdulillah, after we co-founded, and by the way, I'm co-founder, another co-founder is sitting right there. He's my spouse as well and my business partner, Azim. So at Serene Homes and Solutions, we provide 2 types of products. One is short terms. For example, you invest in 6 to 12 months, and other ones are long term, which could hold that real estate asset for 5 to 7 years. Next slide, please. And what is the competitive advantage while working with us? So we are not homegrown investors, real estate investors. We are real estate professionals. We are loaded with real estate education, alhamdulillah. We have market knowledge and experience. We have our own in-house underwriting and due diligence tools for acquiring any real estate asset. We have ability to close quickly. We network across US with elite mastermind real estate groups. We have repeatable processes and systems. We have greater return of investment, alhamdulillah. And we uses advanced real estate techniques around while structuring our real estate and while we exit from the project. And most importantly, it's all interest-free, halal equity profits, and we do not carry any bank loans, alhamdulillah. The last slide will be, and how do you fund those real estate projects, by the way? And this slide will connect to all the brothers who were earlier in the room. It's just cash. It can be a simple cash. It could be halal equity, home line credit. It could be liquidated securities. It could be your stocks investments. It could be your self-directed retirement accounts. If you don't have, please go to Brother Shakib and make one, because you are missing a great deal. If you don't have this, please make it. So these type of sources that can fund our real estate projects, alhamdulillah. Endowment funds, trust accounts, and Brother Muneem already talked about different types of trust accounts. Definitely, I did not do a good job in listing down all types because we know there are many. So you will work with your attorney, your advisor, financial advisor, and be able to create. And now I think that's it. Next slide, if I can share my information with all of. All right, so next steps. If you want to learn more, that's my email. You can call, text for any questions. Website, you can scan, and then go to contact us. I really wanted to hear from you. If you are thinking this is something that has clicked and you have more questions, you want one-on-one schedule, if you go there, you can choose the calendar and time and meet with me or Azim. And if you please can give me your feedback, I would be really happy to hear from you. When you go to the website, click contact us, and then name, email, and then some description that you have to just provide me. Just let me know about you, how you feel about this presentation, and if we can be of any help for you all. Thank you so much, Jazakallah khair for this.
Okay, Jazakallah khair, Sister Sadia, for that presentation. Now we'll be shifting back to online speakers. So we will be having a discussion about crypto, the State of the Union, with two speakers that we're very blessed to have. Brother Modeshim Ben Uthman, who's the founder of Portola Springs Capital, and also Brother Torab Arya, who's the director of BizDev at Movement Labs. Brother Modeshim Ben Uthman is the founder of Portola Springs Capital, a cryptocurrency investing fund. Portola Springs Capital focuses on long-term fundamentals to inform a diversified portfolio of digital assets. Brother Modeshim has an MBA from UCLA Anderson. And also we have, alhamdulillah, Brother Tarab Arya, who's currently the Director of Business Development and Partnerships at Movement Labs. He was at UC Berkeley and was a lecturer at Zaytuna College up there in Berkeley, and has worked for several high-growth startups, mostly in the crypto space. So inshallah, let's have these two brothers.
Hey, assalamu alaikum everyone. You guys hear me? All right. Assalamu alaikum. Muttasim, can you hear me? Yes. All right, let's dive in. Okay, mashallah. Well, assalamu alaikum everyone. I know that everyone's in person and digital is kind of tough in those situations, but inshallah you can bear with us. As was mentioned before, my name is Tarab. I've been full-time crypto for a few years. Before that, I was at B2B enterprise sales. I was in Arabic and Zaytuna, born and raised here in the Bay Area. And I'll let Brother Muttasim introduce himself. Yeah, you guys already heard kind of the bio in terms of me running a crypto fund, and just also want to preface this discussion with the note that this is nothing we cover is to be considered investment advice. Jazakallah khair. All right, so Rob, looks like you're muted. All right, so I'll go ahead and get started. I think the first message I want to relay in regards to crypto or digital assets is for those that are not kind of keeping up with the market, crypto is not dead. I know there's been a lot of negative headlines over the last couple of years. Definitely the market has had some black eyes, especially from exchanges like FTX going bust and a lot of regulatory action that's been basically negative against crypto. And I think it's common for people that are not involved with the industry to think that it is dead because they're also not seeing activity or new apps or anything like that. So crypto definitely does have its challenges in that we have yet to have our kind of iPhone moment in terms of an app that has reached the masses. And we'll talk a little bit more about that. There are some things that are kind of more under the radar that are happening. So Tarab, should I just kind of start with, go ahead.
Yeah, so I was gonna say, I think the first thing that a lot of people are worried about is the legal aspect of it. So would you mind sharing a little bit what's going on with the SEC and kind of where are we in the regulatory compliance part of crypto?
Yeah, so first we have kind of there are some participants specifically in the US, being the SEC and Elizabeth Warren. Those are probably the two most actively kind of anti-crypto people in the regulatory space. So the SEC has been taking both action in terms of lawsuits and fines against crypto participants. But then they've also, probably the biggest problem is that they have not been providing new regulations and guidance for the good actors in the space to basically conduct crypto business in a compliant manner from their viewpoint. So they've basically been just trying to regulate through lawsuits rather than providing guidance. So there have been probably the most notable of recent is SEC lawsuits against Binance and Coinbase. I would say Binance is kind of deserved because they've played the route of trying to ask for forgiveness later, and they're focused on outside of the US. Whereas Coinbase is a public company and has been trying to do their best to be compliant from day one. So the fact that the SEC has gone after them, I think is starting to burn some bridges within the political landscape of people realizing like, okay, the SEC has gone too far. Now, one thing to keep note of, though, is that when FTX went out of business and lost a lot of people money, that became a black eye that kind of gave a lot of ammo for the regulatory landscape to kind of be anti-crypto for a bit. So that stigma kind of set the industry back by a year or more. So that's something that will fade over time. Generally speaking, we've seen kind of US politics become less friendly to crypto over the last year or two, while the rest of the world has started to become significantly more friendly to crypto. An example would be China, which many years ago was very anti-crypto, more recently has allowed Hong Kong to become a crypto-friendly place. Also, we're seeing United Arab Emirates, the United Kingdom, Singapore, and a few other areas that are taking very proactive measures to become crypto friendly. So we're starting to see some flight of talents moving out of the US and into these territories just because of these rules. And we're also starting to see some crypto applications not being designed to support US users. So at the end, this anti-crypto kind of methodology or mentality by some of our lawmakers really hurts the US in the long term. But I think that's going to change, because at the end of the day, what we're seeing is as younger people come into office and as younger people vote more, there's a realization that the people basically do support crypto and want a crypto friendly solution. And then also crypto industry is learning how to lobby a little better in the space. So I think especially after the election in about a year, that should I think clear things up a little bit, and I think going forward, things will start to improve on the US. But for now, the rest of the world is getting much further ahead. One thing to note, by the way, is more kind of bigger picture, deglobalization that's happening around the world. Long term, that should be beneficial for crypto, because what's happening is countries and people are starting to trust each other less and the systems less, and decentralized infrastructure and solutions that crypto provides helps solve some of these problems.
Yeah, and I can say just the team I'm with, they're all American. Our entire team is American, and we're trying to figure out where to establish because the US makes it very difficult to conduct business. So Fredericksburg, Island, Dubai, these are all things where founders are like, I'm gonna have to live within the next 2-3 months if I don't want to go out of business. So these are all, but so what do you say to people? So okay, if I'm a normal non-crypto native person, which I'm assuming a lot of people in the audience are, and they just see the headlines about this Sam Bankman-Fried and FTX, like what's your message to those people when like that's the only headline?
Yeah, I think it's a matter of the industry is still early. We're doing there are things under the hood where we're starting to see adoption. So probably the biggest case would be for stable coins. So for those of you not familiar, stable coins are basically cryptocurrencies that are just tied to the dollar. So USDC or USDT, for example, are tokens that are always valued or designed to always be valued at $1. So they're not necessarily good investments for you and I in the US because it's not supposed to go up in value, but they've become a very convenient mechanism, one for transferring assets, people trying to send dollars to a family abroad and so forth and doing it quickly, but also has been really valuable in terms of giving the rest of the world, especially the underdeveloped countries, access to US dollar accounts, basically, right? So if you're in an underdeveloped country, you cannot get a bank account that's in the US dollar. You can only get a bank account in your local currency, and odds are very high that currency is very highly inflationary. So many people want access to dollar accounts but can't, and then the stable coins are basically giving that mechanism. So for over the last year or two, we're starting to see volumes of stable coins start to be independent of volumes of crypto trading, right? So in the past, it would volume usage would go up and down with the same cycle of the crypto market. So if it's very active, same with stable coins, but now we're seeing some consistent volume just based on or independent of what's happening in the crypto market from a trading perspective. So stable coins are big within the crypto ecosystem. We're seeing a lot of activity with things like DeFi or decentralized finance. This has basically lending and trading and things like that. Some of these aspects are not Sharia compliant, but some are. And I think what you can, each of these requires digging to kind of figure out what is compliant and what is not, right? An example would be there's a mechanism called staking, where if you buy a certain tokens, you can stake them and receive an APY per year or whatever. And in some cases, that APY is considered interest-based and therefore not Sharia compliant. But in many cases, like in staking, you're actually providing a service to the network from a security standpoint, and therefore you're getting a reward for that service and risk you're taking, and therefore it's not a riba-based concept. Also, similarly, Coinbase, if you have a Coinbase account, you'll notice that they have a USDC, which is a stable coin, a reward rate where they're offering basically 5% when you keep your money in USDC in their account. That normally sounds very much like interest, but if you look in the details of how they've actually structured this program, at least currently, it may change in the future. Currently, it's actually not interest-based. That money, that 5% that's coming out is basically tied to their assumedly their marketing budget, but it's very explicitly not tied to them lending your money out or anything like that.
Cool. Yeah, and one thing I will add about the whole stable coins is in America, we can't take for granted. We just use the dollar for everything. But when I was in Turkey, I would see, I don't know if you guys know USDT, but they have this green tea. That's like their symbol. And I used to see it all around Istanbul. And one day I just walked in, I said, what are you guys? And they said, hey, we actually will give you lira for stable coins or Bitcoin or Ethereum, whatever you want. We'll trade it for you. And so then when I went for the rates, they actually gave me better rates if I gave them stable coin than if I actually gave them hard US dollars for cash. So it was really interesting to see like the demand for trading. But yeah, so you talked about stable coins and DeFi. So do you mind kind of walking, we talked about regulatory, do you mind talking a little bit from a tech perspective Like you talked about Ethereum, Proof of Stake. What are some other projects or concepts that are really interesting right now in crypto?
Yeah, sure. And just FYI, Tarab, just got a message that your audio is a little hard to hear. So if there's anything you can do to adjust that, great. But in terms of the technology, basically with crypto, we're seeing there are a lot of hurdles, right? So current problems within the techs from the tech perspective include scalability. So when something becomes really popular, it tends to congest the network, which makes it slow and very expensive. We're also seeing problems with security, with a lot of hacks and things like that. And then probably most importantly, there are still many challenges in regards to the UI and UX, the user interface of using crypto. It's still a very cumbersome process using wallets and keys and things like that. So the scalability problem has achieved a lot of progress over the last couple of years with things called layer 2s and zero knowledge proofs and things like that. So that's improving very rapidly. On the security and UI user interface, user experience side, that's a little more slow going. So we still have some work to do for that. Will probably take a couple of years before we start to see some real changes there. Also, but we are still seeing a lot of experimentation on the application side. An example would be a recent app came out called FriendTech, which is kind of like a Twitter or a chat social media type app that's on the blockchain. And what happens is instead of you just being able to follow anyone, you have to basically buy their token, the individual person's token. And once you buy that person's token, you can see everything they write in their chat and you can message them and so forth. And it's created kind of like this interesting game theory about their individual people's token prices going up and down based on how the quality of their messaging in this social media app. So this type of experimentation eventually will kind of make its way into some kind of breakthrough app, or some existing popular apps like Twitter, et cetera, will start to include some crypto in some of their mechanisms. Also, we're expecting to see some over the next year or two, and certainly beyond, gaming to start to include tokenization. So that will start to be inshallah.
Cool. And hopefully you can hear me better now. But what about in terms of like regulated versus unregulated KYC, I should say? Like, what are your thoughts on that and kind of what's happening on that front?
Yeah, so crypto is interesting because most of crypto is basically open source codes, and a lot of things in crypto, especially DeFi, has targeted an unregulated route, right? Like it's almost regulatory arbitrage, right? So banking, for example, it's very hard to start a bank and do certain things, offer certain solutions. So what people are doing is just they're building the software on the crypto rails on a blockchain and then offering it. And if it's considered illegal in the US, then they just don't offer it in the US, and that's it. So in order for crypto to grow and reach the masses, obviously you can't just kind of have things that are just completely illegal in big countries like the US. So what some people are building are basically more regulated solutions on top of crypto. So what's likely to happen is we'll probably have like a parallel worlds running on the blockchain, where there are going to be some blockchains and some apps that are very compliant, and they'll have, so for example, a trading or a lending blockchain app would have KYC, and you have to kind of go through the process before you trade and put money there, while another app that does the same thing may not have the KYC piece. So there'll be a regulated path and an unregulated path, and depending on where you live and also the type of risk you're looking to pursue and so forth, that determines which app you would use. So it's an evolving landscape, and likely will service both sectors.
So speaking of regulated, unregulated, there was, I think, something that came out about ETFs this past week. So if the ETF has been passed, what do you think that means for the market? What do you think it means for like the everyday investor who just has money in their 401k?
Yeah, I think so obviously none of this is investment advice, but we're seeing and we're coming off of 2 years or so of a strong bear market. So it's been, if you hold crypto, it's been a rough time. But we've historically seen in crypto 4-year cycles. So a couple of years of bull market and a couple of years of bear market. Typically, those cycles have been following what's called the Bitcoin halving, where every 4 years the inflation rate for Bitcoin gets cut in half. So it's a reduction in the increase in supply of Bitcoin. And then also what we're seeing here coming up in 2024 is some potentially big news about ETFs. So just last week, or just a couple of days ago, we got an approval for an Ethereum futures ETF, but more importantly, in like what's rumored to happen in potentially early January, is a spot-based ETF, which basically means direct purchase of Bitcoin in an ETF. So this is important because these Bitcoin ETFs have been denied by the SEC for many years, but due to some changes in recent lawsuits that have happened where the SEC has lost, the odds have increased significantly where a Bitcoin ETF will likely be approved in the coming months. Part of a signal that kind of hints at that also is BlackRock filed for an ETF, a Bitcoin ETF, and BlackRock has a very strong history of, one, success in their filings, and two, kind of knowing the inner workings of kind of what's happening on the regulatory side. So for 2024, we've got the early 2024, we've got the Bitcoin halving, we've got a potential Bitcoin ETF, which, by the way, is important because it increases demands in that there's a lot of money sitting in 401ks and other retirement accounts that want to invest in Bitcoin but cannot, because there aren't any good vehicles to do so. So if this gets approved, that allows more money to enter and invest in crypto. And then once there's an investment in Bitcoin, then usually that money tends to flow into other coins as well. And crypto, as we've seen in the past, is very much a momentum-driven market. So as positive things come in, positive news comes in that starts to initiate positive traction, then it tends to just kind of snowball. And we've seen it works both ways, right? But the snowball effect it can be quite strong.
So gun to your head, if the ETF gets approved for buying spot Bitcoin and maybe even Ethereum, do you think, obviously you don't have a crystal ball, but do you think that would be enough to spark some type of crypto run or whatever, a crypto bull run, whatever people call it?
Yeah, I think the odds of that are quite high. Both at times with the 4-year cycle. These are two very notable events that both impact the supply and the demand. And then we're starting to see a lot of progress on the tech front and so forth. So things can get very exciting in 2024, inshallah.
Gotcha. Okay. And in terms of like someone who wants to learn more about crypto or they want to invest, do you have anything that you can share with them in that regard?
Yeah, I think, one, just kind of do research, talk to friends that are invested in crypto and have spent some time there. Coinbase is always a good, safe avenue to start with in terms of investing in crypto. But always, with any type of crypto, please be very careful. There are a lot of scams out there. And even on the Islamic side, there are some Islamic blockchain projects that historically have been quite scammy. It's at the end of the day, it's a free-for-all where people try to take advantage of others, and the consequences in this space are hard, are not as clear cut as in the real world, the non-crypto world. So so Coinbase is a good start, and just try to research as much as possible beforehand, and also talk to friends that are invested in crypto to get their advice on things.
Okay, cool. Yeah, my last question was going to be, what do I tell to my family members who tell me I'm stupid for being in crypto and that it's all a scam? But you kind of addressed it. That's okay.
So all these things it's just a matter of time, inshallah, right? At the end of the day, so a lot of people just think of crypto and Bitcoin, right? But really, most of crypto is not Bitcoin. Most of crypto is a tech investment, and this technology is very nascent, and the companies that are building apps using this tech they just started a few years ago. So it's going to take time before these apps become really useful and have their moment to mass adoption. But once that happens, and inshallah, that will significantly drive a lot of value into the marketplace. So it's a patience matter. The technology is really strong. The fact that things are decentralized and open source allows for that innovation to compound, right? You heard the prior speaker or the 2 speakers ago talk about the impact of compounding from an investment standpoint, but there's also the compounding effect from a knowledge and development standpoint. So because it's all open source, people are able to build upon each other's work rather than the siloed competition that happens typically in the Bay Area, for example. In this case, you can see what you can see the competitor's code, and you're allowed to copy their code. So that creates a cycle of innovation that's significantly faster, and therefore, in my opinion, inshallah, it's just a matter of time before we start to see some really useful things come out of it.
Yeah, and okay, obviously I'm ridiculously biased towards crypto, but I remember only until recently everyone saw AI as a joke, right? MLM, like, yeah, freaking right. Everyone, like, because I worked at Salesforce and they're like, oh, we're going to start using AI. And everyone knew it was not true, right? And then until Chat GPT came out, all of a sudden, like, wow, this thing is real. So kind of like you said, the iPhone moment or the Chat GPT moment, we're still waiting for it. But a lot of people said AI was a scam until recently too. So
exactly.
Yeah.
That's a great point. All right, everyone. I'll ask Tanvir to post my email address in the chat box. So if any of you have any follow-up questions, please feel free to reach out. And may Allah bless your investing.
Hey, that was a phenomenal talk. Thank you, Motasim and Turab. There was a question on the chat regarding what are your thoughts about JP Morgan getting into ETFs? Are you able to take that question?
Yeah, so I think the more companies, as I hinted earlier, I think BlackRock getting into ETFs it's a much more notable impact. But yes, the more TradFi that gets into crypto, that's not that one sends a signal of legitimacy, and two, it sets kind of a trajectory for significant growth because the money in TradFi is significantly bigger than kind of the money that's in the side pocket of crypto happening today. So as these two industries start to merge, then that allows for crypto to grow significantly. So most of these companies, the big TradFi companies, while they're taking a very slow approach because the regulatory landscape is still a little unclear, they are still investing in it in the sense of they have crypto teams. They're doing a lot of research. Some are even building their own blockchains. Some are building apps that are running on existing blockchains. It's just these are all internal things that they're ready to use, right? But the activity is there, right? And back to my point earlier about stable coins, just to give you an idea of kind of how much that's already being used today. The volume on stable coins in a year or over the last year is equivalent to the volume of dollars on PayPal. They're equivalent to the dollars on Visa, and they're 10x the volume of PayPal. So this is significant usage. So yeah.
And I stand corrected. I said ETF, but the question was around crypto. So does that change your answer?
No, it's generally the same in that JP Morgan is building JP Morgan is building some solutions, like for example, they've built a blockchain using some of Ethereum's technology, but designed to be a little more compliant, or work with KYC and things like that. So they've gone kind of back and forth in terms of doing their own thing versus running something on top of some of the existing platforms. But all of that work is very positive. It shows that they're investing and they think they're working towards where the puck is going, right? So right now, they're not necessarily offering too many crypto-related solutions, but they know that it's just a matter of time. So they're making the investments from years ago, actually.
Well, that was a great conversation. Thank you, Turab and Motasim. Any questions from the audience, or you folks good? I'm very tempted to ask you, and I know you can't predict or whatever, but the general industry. Bitcoin 100K, we saw 70K, Bitcoin at 100K. What is the general belief among the maximalists and the bulls, right? That you think as we get close to the halving, Q1 could we see 100K potentially for Bitcoin in Q1 of next year?
I won't make any price predictions. And as you guys know, if you look online, you'll see all kinds of crazy predictions, ranging from $1 million to $0. And it's anyone's guess, right? But I think if you look at past 4-year cycles, every new bull market has reached new highs, right? So if you look at the high from the last cycle, and if you assume these cycles will continue that pattern, then you kind of have at least a base and anchor point to think through and work off of. And another thing to think of is that there are many other coins, and each of these coins are almost like their own business. And what's going to happen is, just like in the .com era, there are going to be a few really big winners, right? So like think of like investing and buying Amazon stock in the early days when they were just selling books. So I assume, Allahu Alam, something similar will happen with some of these other cryptos. So that's kind of why Tarab and I are in the market in terms of trying to understand what's really happening from a tech perspective and adoption standpoint and so forth, so we can try to see these things coming in advance.
Well said, Mutassim. Thank you again for joining us, all from SoCal remotely. We really appreciate you sharing your wisdom, and we'll be in touch, and hopefully you'll be back in the future. Jazakallah khair. Thank you so much. All right, folks. Well, yeah, we've covered so much, so we're down to the last one. So before I bring up our next speaker, I think every event is a learning experience for us. 2 years ago, we did a virtual event called the Halal Money Expo. It was an all-day event, like 8 hours. We had sessions on entrepreneurship, sessions on cryptocurrency. We always like to cover real estate because it's such a big asset class, and there's so many things within real estate. So we'll also end our day with a topic on real estate. We actually had 2 speakers, but one of them had a genuine emergency and couldn't make it. So we'll not be covering the talk on ABCs of ADUs, but we are committing to doing a recorded session, do a very exciting event around ADUs, and we'll make that available through the WBMA channels and also through our own social media channels. But today we have Brother Farzad Bonatkar from Compass Realty, who's going to do a brief talk on the state of the Bay Area market, right? So he's got some great data to share. He has over a decade of experience, having worked for leading brokerages like Keller Williams and now at Compass. Very dedicated towards his customers. He's highly recommended by folks who've known him. And he's going to cover some really cool data. He's an award-winning real estate professional, done a lot of significant volume, and as you know, Compass is a very big name in the real estate industry. So without further ado, this is our final talk. After which 5:30 will be our break for prayers, and then please do join us for dinner after namaz, after salat. So without further ado, Farzad Bonatkar. Thank you.
Assalamu alaikum. Can you hear me? Bismillah ar-Rahman ar-Rahim. Assalamu alaikum, everyone. Thank you for having me today here. And I'm going to briefly go through some highlights of our area's market and give you some idea where we are heading in terms of real estate environment that we are at. And I will share some data points with you in a more broader terms nationwide. But let me start with the data census, Santa Clara County census snapshots here. And yeah, so as you can, a lot of people think that most people own a home in our area. Actually, that's not the case. If you look at the data here, in housing occupancy there, you see that only 54% of people own a home. So that's pretty low, and that tells me why we have built up demand for affordable housing, and we have we are always in multiple offer situation. So if you go down and look at the housing by era of construction down there, you can notice that only 2% of homes have been built between 2020 and 2022. So that's another indication which is pretty low, and it shows that we're not producing enough homes in this area. This is about the data is related to the Santa Clara County. And moving away from that, if you take a look at the employment part, I'm sure this is not a surprise to any of us. Almost 41% of people are in education, health, social assistance, professional, scientific management, meaning engineers, high-level managers. So that consists of, constitute our 41% of our workforce here. And that's another indication of the affordability in our market, which is one of the drivers of the real estate market. So look at the income actually on top of that, household income. So here in this area, 38% of people 38% of households are earning $200,000 and above. That's a lot of money. And but still, it may not be a big amount to buy $2 million homes, but it's by itself, it shows you a high comparison. So given that, I'm gonna run down to the second slide here. And in particular, I want to point out to look at guys to Santa Clara down there. Santa Clara, as you can see, we have the average income of slightly above $200,000, and homeowners are like 54%, 54% of the people here. And the interesting thing here is the population. So here is that we have population, 1,871,000 almost. And that's the most populated county compared to other counties around in Bay Area. And again, that shows us where we are and why we are in the situation that we are right now. So given that, I'm gonna move into actually today's market with I'm gonna move into today's market to show you what's happened to mortgage rates since February 2023. So from 2023 February, we have a jump from 6% to almost 7.5% here in this market. So that's a lot of extra money that goes into the monthly payments. And part of that, some of those folks have already refined 2 years before that at around 3%. And that's one of the reasons that you can see there is a chasm actually between these two. And that's another indication that why not many people want to sell. They want to just lock in, hold on to their current mortgage rates, and they're not willing to sell. And in part, this explains the shortage of inventory here. So I'm sorry. So here, let's move on to the unemployment demographics here in our area in Santa Clara. 14%, pretty high. We can see 14% pretty high unemployment rates during pandemic. But look where we are now. We are almost at 4%. And that tells us we are in a very robust economy in San Mateo, Santa Clara, and in general South Bay area. So, and if you want to, get a better sense, get it more granular, I will take you here to see the percentage of 25 years old to 34 years old adults still living at home. So these people are, they are adults that, they are still living at home for various reasons. Interesting enough, you may think that your kids, I'm sorry. I'm at the same time syncing my laptop and a different computer. Okay, yeah. One more. Okay, yeah, here. So here again, the percentage of 25 years old to 34 years old adults that still living at home, most probably with their parents, and that is, in part, it would be interesting enough for you that you think your kids goes away to school and they come back. My answer is yes. Let's look at the data here. So the kids aged between 25 to 34 years old, more than likely 20% of them are going to be at home at that age with you. And that can be, that can have, different reasons for that. And it could be partly because they can't afford to buy a home, or they're just pushed to go back to home to save up. And also in part, there are some cultural reasons for that. We here, Middle Easterns, as many other cultures, they like to have extended family with them at home. And that also bring up another, trend in our market. And that nowadays people like to have more customized floor plans, with master suites and, ADUs, which can house more people. So with that, I'm gonna go to US median home prices. Here you can see that it has gone up a lot, and look at the boom on 2022. So you can see that we have been on a steady rise in median single family home prices, which is not a surprise for us in this area, especially Santa Clara County. And we have had in August 2023, just recently, there has been the home median home prices slightly ticked up from July and increased 3.7% from August 2022. So you can see 3.7% from August 22, just in last August. So this, given the rise in median home prices, I now can show you a critical market factor that in part is responsible for that. And in the next slide, and it's nothing but the inventory. So inventory is one of the critical market factors in real estate everywhere. And as you can see, we have active active inventory all across the country is down. So the number of homes for sale is running extremely low by long-term norms. That's because more people needs home, more people are moving in, more people are opening up businesses up here, and we're going to have a real shortage in terms of the real estate here. So that still tells me, even though the rates has gone up and it slows things down, but the prices are going up still. So don't get confused with the list price, sales price in the market. You know, people list it and they can sell it higher or lower. But if they list it, you know, well, most of the times they can get it beat up, and with that, you know, there may be some, you know, unrealistic sellers in the market that put unreasonable price on their home to sell. But at the end of the day, the actual sales price is higher than the home sold last time in the same neighborhood. That's the real comparison. So here, let me just take you to this. This is another, the same thing, inventory based on the, you know, on a more wider period of time. And I would say, you know, if I had to make a prediction, we're not gonna see a lot of changes because it's an election year, and things are expected to stay the same. It's more of riding up and down. If inflation goes too high, they may take interest rates higher a little bit, and if it goes down, they may, you know, drop it a little bit. So you know, for the time to come. So this is I can tell that I don't see any major changes for the next year throughout 2024. So that would be the you know, what we see now from the data. And here is another data point, which isn't, this is my last slide. I want to keep it short for you guys. And this is based on the months of supply of inventory. That basically says that if we sell all the existing inventory, all the existing inventory, how long it's going to take. So currently it's at 3, that means 3 months. So if we don't add any home to the market, we just have supply for 3 months with the current sales activity, with the current rate, which is pretty low compared to, you know, long-term standards. And as you can see, it could be, you know, it's been mostly, it used to be higher than that. And this is another indication for that. People always ask me, you know, is it a good time to buy or sell? And I would say yes. And he goes, how could it be both? So I say that, well, if you are a seller and your price of, well, people are bidding on it, and you get a, you know, you can get a good price for your home. And if you're a buyer, you get it now, you get appreciation for 2 years from now. And if you don't get it 2 years later, you would say, I wish I would have bought it 2 years back. And that's the thing is, you know, that, and the rates can go down or high, but if the rates goes down, you can always refinance. There are some lenders, then they can let you to refinance at no cost if you stay with them. So that's this kind of the market that we are at the moment. So yeah, I have another slide here which is not uploaded there. So by that, I just want to say this was just a sample data to share with you, to give you some sense what's going on in our market. We have a flip book here with all the data, all the information, all the comparisons for, you know, home prices, mortgage rates, inflation rates, and everything, and nationwide, so you can have a bigger picture about what's going on in the nation and also local. This was mainly focused on the local market, Santa Clara County, to give you some idea what's going on. But if anyone interested, I can share that flip book with all the graphs and data. So just let me know. I'll share it with you. I would be happy to do that. Thank you again for giving me the chance to speak here, and have a great evening.
Thank you. Thank you.
Thank you.
You're welcome. So folks, we excited to wrap up this event. It's time for Salat. So we'll head out to the prayer hall, but please, after prayers, make sure you have your dinner here, or we have to-go boxes. You know, you can pick up your to-go box, but please do, you know, have dinner or take the box with you. Thank you for joining us, and please feel free to share your feedback so we could make our events more effective in the future. Jazakallah khair. We really appreciate having everybody and all our speakers and our partners.